Good morning, good afternoon, good evening. What's going on, gang? What's good, you two? Long ass weekend for your boy. Luckily, market makers managed to hold this down. Yeah, I think we come back down through the bottom of this range, grab all these liquidations. Backed up right now, pretty thick. Oh, doing ripping. Hmm. About to give. Nice. That was a good exit on Crow. All right, so all of our vector targets to the top have cleared. Right, knocked all of those out. DJ, basically what it means is institutions would have to force buy, right? Anybody buying the S&P would, in a roundabout way, be buying MicroStrategy. Yeah, that's the holy grail, right? That's institutional passive inflows, like 401k inflows. Yeah, that'll be crazy, bro. Crazy. Yeah, I'll look at XRP and then Farcoin, and then I gotta see what I missed in the last couple days on the charts. Looks good. Remember I told you earlier, be careful for those patterns that give you a measured move that's way too deep on structural support, right? That's like this head and shoulders. Technically, on paper, that head and shoulders should drop you back down to $1. That just doesn't make sense, right? With the seasonality and what we're looking at, like this is an irrational measured move. Problem is they look just like every other measured move, and it takes a little bit of experience to know when to ignore and when not to. But this looks good. Now this measured move is possible. Right? We've already broke that M pattern. We're in the process of sort of retesting it now. Right? Broke that support, tried to get over, couldn't. Still trying to get over. My guess is one more attempt, clear this vector into this 50, and then it rolls over a bit. I don't think it's difficult to trade XRP. It's just you have to deal with a lot of the new shit that other you have to deal with a lot of the FUD that some other coins don't have, basically. But now there's nothing particularly difficult about trading XRP. Let's take a look at FART. Yeah, FART's still distributing. Double top, lower high. So we've got our targets. We know what we need to get back over to kill this downtrend. Right? First this double top, lower highs, but it still looks like it's in distribution to me. This M pattern here from this double top is what we have to focus on. That boy right there. This is another one of those that has a measured move that is pretty improbable. Not impossible, just not probable. Right? Chances are you're not going to put in fresh lows on fart. Right? But again, we've got macro support with a large bearish pattern that's measured move seems improbable. Right? This is a setup for front running. I'm not saying price doesn't come down. Right? I'm not saying price doesn't come down, clear these vectors or something. Saying that people are waiting for this move more than likely are going to get front run. So don't let these big spooky patterns scare you when they're sitting above macro support. And do a little bit of research here and see what I missed over the last 12 hours. We're putting in our psychological ranges, right? We know how this works. Market maker likes to bring that CME close within the psychological ranges. This week is a little weird because we had a really big premium on CME, right? CME. Oh, damn it. Mouse just died. Too much mouse TA, guys. All right, give that a second to charge up. But that psychological range, like I said, will try to encompass the CME close. The problem is CME perps closed at 1077. CME futures closed at 1088. Right? So our mid board or our midline is where our CME closes. We'll see what the algo does. Right now, we'll be able to tell, in my opinion, which CME close the algo is respecting more. Right? At least by the end of the day, once the psychological range stops forming. All right, give me a second, y'all. I'm gonna jump on Twitter and see what's going on while this mouse recharges.
Happy Saturday night.
It's good, Rick.
Oh, I just opened up at work. It's quiet as hell, so thought I'd
Super
jump in
quiet.
and listen out. Yeah, it's quiet.
It's good though. I think everybody needed this pause.
Yeah. Reset the sentiment, reset the emotions.
Just
Or,
breathe.
or,
Just breathe at a normal pace for 24 hours instead
oh,
of hyperventilating.
true that. True that. Yep. Yeah. It's been a kind of a turbulent year. There's been a lot of things, you know? Ever since Trump got elected, it's just been all sorts of turbulence in all directions.
Yeah.
We've had some really up moments, we've had some big dips, and yeah, a whole gamut of emotions.
You created a lot of maxis.
Yeah, yeah, definitely. Yeah, seeing the behavior of Bitcoin in this cycle, I think that would definitely make people a lot more confident in Bitcoin.
Talking to people about buying Bitcoin at the bottom of the next bear is going to be exponentially easier than it's been
Yeah, dude.
in the
Oh,
past because people will have a fresh memory of it, you know?
yep. And I think as we get more cycles under our belt, it just instills like the confidence in it because it's like, okay, it's been doing this. Okay, it was cute that it did it twice. It's like, okay, cool. Let's see if it does it, and then it does it a third time. Then it does it a fourth time. It's like, oh wow, okay,
Yeah.
there is a rhythm to Bitcoin that's becoming stronger. You could argue. Um, if you get more participation from Wall Street, that doesn't change the course. It just makes the course louder.
It's just an extra pool of liquidity that we didn't have before.
Yeah, exactly. There's just more players now,
Yeah.
more money in it. Yeah, but we were sort of talking about this, me and a couple of people yesterday, about just the rhythm of the market and how, like, to what level do the manipulators play? And do they play the macro? Like, can they influence and manipulate the macro? And I think less
1,000%.
such.
The older whales can, right? We saw the whale chart. Like we've seen the
Mm.
overlays from one bull market to another, right? How for the past 3 cycles they managed to keep those same pivot points. Um, the difference now is that they're not the only big fish in the game, right? Before the whales and miners had it on lock, and they were all in lockstep, right? They all literally traded the same way. They followed the cycle, so things moved intentionally. Now we're seeing some of that friction, right? We're seeing some of the friction from the institutions that come in that understand the cycle and are playing it, the ones that don't understand the cycle and they're trying to brute force it with just cash, you know, trying to throw as much money at the problem as they can, thinking that they can just make this thing, you know, pump into Valhalla even if it's not time. So we're dealing with some of those
Yeah.
growing pains.
With the cycle thing and the manipulators, what I more meant was you're not going to get anyone that's able to throw Bitcoin off its path,
Yeah,
like of
yeah,
its rhythm. I mean, what's the biggest threat to Bitcoin's rhythm was COVID, but the pandemic. And yes, momentarily it did throw it off its course, but look at how we course corrected and came back in line with the rhythm anyway. Like it sort of finds its way, like after it all settles, like after the dust settles from whatever event, it gets back to what the market was like working on with it, I
yeah.
suppose. Yeah.
I think Bitcoin's biggest risk has always been Satoshi selling off. And
Mm,
what this year has given us, um, not that that's any more probable, but if it was to
mm.
happen, we've got buyers now. We never had that before.
Yeah, totally, totally. The thing is, okay, let's do a hypothetical. Let's say Satoshi dumps everything in the next quarter. people are going to be picking that up. Yeah, it's just going to get redistributed. It'll cause waves, no doubt,
They'll give us
but
some great prices,
that'll,
but they won't last
yeah.
long.
I mean, I don't think it would kill Bitcoin. It'd cause some drama, but like, I mean, yeah, we've seen things cause drama in the market already. Like,
Yeah.
not to the level of what Satoshi selling everything would cause, but like we've seen FTX go down, we've seen Terra Luna, we've seen Celsius, like, China bans, like hacks to like Mount Gox. Like that was very. I mean, that the whole almost all of Bitcoin's existence was like Mount Gox related at one point. And for that to get hacked, that was a big deal back then.
Yeah.
So yeah, it's been through a lot. So it has been. Bitcoin's been through a lot of things, and it always finds a way at the end of the day. Yeah, it wouldn't surprise me if it's an asset traded long after we've gone, Like if it's just something would have to throw it off. Like governments would have to all coordinate a ban, essentially, like a worldwide ban of it or something like that.
Yeah. And you'd
That's the
still
only
have
way I
like a
would see.
ragtag group of
Mm,
rebels that
oh,
kept it alive.
100%.
Yeah.
Yep. There would still be like your Pirate Bay style community keeping it happening under the scenes, like behind the scenes. Like, and yeah, there'll always be a group that are buying and selling Bitcoin, I think. And the cool thing is, yeah, Bitcoin doesn't really answer to any department because it's not bound by like location. It's it's a non-location asset. It's not bound to any country.
Yeah.
It's really cool. It's kind of like an alien, really. It's not of Earth. It's not on. You don't go dig it out of the ground. You don't grow it. You don't. Yeah, it is interesting. It's a virtual thing.
What I think is
Kind of
crazy is
cool.
how people have reacted to this Bitcoin cycle as if it's been lackluster or something. And
Mhm.
I just don't like just going back to,
Don't agree.
2016, right? Like,
Mm,
yeah, that was a parabolic curve up,
it
indeed.
was.
But every single one of these corrections on the way up was like 30%. What, 30%,
Mm,
32%, 40%. And I mean, it was all the time, another 40%. Like literally, you'd pop, drop 40%, pop, drop 30%, pop, drop.
yeah,
And then we looked at
yeah.
the one that I guess most people consider the most parabolic. But look at this price action on
Mm,
Bitcoin. I
yeah,
mean,
man.
this shit was not fun to go. This was not like kick your feet up on the desk.
Yeah.
Not until like halfway through, right? Finally popped,
Oh, totally.
COVID. Then around here is where it started getting nice again. And then even then, you had 30%
Mm.
drop, another 20% drop. Right now, look at this one. This has been the most stair stepped. Just
Mm,
go consolidate, go
cycle.
consolidate, go consolidate, go consolidate. Couple drops, right? But we're averaging like 20% on these drops instead of the 30 on the other. But just the
Yeah,
trajectory of it,
yeah.
right?
It's
I mean,
been
you can
steady.
literally draw a trend line on this shit all the way up.
Mm,
Well, there it is, right? So we've
yeah.
never had that sort of. The problem is that at this same time, people got wrecked back to zero 3 or 4 times on alts.
Yeah, I know, right? The alt's a different
So,
story,
so
totally.
you look at the bull market and you're like, oh, this
Mm,
bull market sucks. And it's like,
mm,
the rotational part of it has been different. And the longer it takes you
yes.
to pick up on that, the more it ends up costing you.
Yep. And that, I believe, as you said earlier, that adds fuel to the Bitcoin maxi sentiment. Like, as in, more people are now seeing the light of Bitcoin
Oh,
being the
yeah.
dominant force in the cycle. and seeing, okay, well, why am I messing around risking it on things that might not do anything or might pop for a month, and I'm waiting for it to pop for 6 months in a row and it's just not happening, and
Yeah.
I'm round tripping and wasting time sitting in it. Um, yeah, alts are very sensitive, man. Like they're very season sensitive, and like they need the right circumstances. Their stars aligning is way more sensitive than the Bitcoin stars.
There needs
Bitcoin's
to be
pretty
money.
resilient.
There needs to be like
Yeah, totally.
liquidity,
Yep.
excess liquidity,
Yep.
not just liquidity, right? Liquidity gets you
Mm,
all the things you need. Excess liquidity
yeah.
is when you start to feel rich and you start to take risks on things, you know? Like we're not there yet,
Mm,
in my opinion.
yeah, totally. I know that we don't have this metric, but and the hypothetical of it, like, what if the ETFs never happened? Where would Bitcoin and Ethereum have got to by this point? You know, in its bull, like this current year, this cycle,
Yeah.
would it have ever have hit 100,000? Probably. I think it would have hit 100. Maybe not 124 though. I don't know. It's hard to say.
It
Hard to
depends,
say.
man. The ETFs concentrated a lot of the speculation.
Mm,
So it's
it
like,
did.
and then it brought in a lot of money that never had any intention on flowing through alts.
Yeah, that's it.
This legacy money,
Stayed on the
we
Bitcoin rails.
took us, 15 years to convince these people they should invest in Bitcoin. They weren't
Mm.
automatically going to bring their legacy money over, buy Bitcoin, and then buy your shitcoin.
The thing,
We've seen the adoption, we've seen the institutional adoption of certain alts, and then those alts have gone. It's obvious. It's like what
yeah,
the institutions are interested in, that's going to move. And then all the way on
yeah.
the other side of the curve is the highly speculative meme coin shit. But
Mm.
nobody bought anything in the middle.
Yeah. Speaking of TradFi and like Wall Street and all the funds that go with it, the people that got involved now in the Bitcoin ETFs, I would say they're more of the speculative Wall Street. They're the more risk taker style hungry. But think of how much of Wall Street didn't touch it yet, and they're waiting for the bear. Like, oh, like they're not coming in halfway through a bull market,
Yeah.
or they want proof. They want the proof, and the proof is happening. So they're like, okay, well, I'm not going to buy it here. I'm not going to accumulate it at the top. I'll wait for the big, cycle to flush out, and then that's when you'll see. I'm thinking this is my hypothesis or my theory is that they're going to get involved way bigger in the next bear market.
Yeah.
And
I
this is
agree.
how people are saying, oh, yeah, you won't get the 80, 70% correction on Bitcoin because of all these people that are going to be lining up to build in Bitcoin, like build a Bitcoin position.
So this is my
Because I
theory
feel,
when it comes to that, right? Because I think
mm,
there is some merit to that, but
mm,
the way I'm looking at it is, so if we look at our cycles, we have that year down, and then we
yep,
have that year of sideways that it takes for everybody to realize that crypto's not dead.
yeah, that
Right?
kind of choppy
Crypto's
year.
dead. We find the bottom and then we chop, right? Until
Mm,
everybody finally realizes, okay, Bitcoin's not dead. This thing is going to cycle again. So that
mm,
section, I believe, is shorter this time,
yeah,
right? There's all people are already convinced. So when we get to
totally.
those lows, I don't think we're going to have that. But what I do think we're going to have is what we had on Ethereum, right? The early, more risky, like you said, legacy guys got in on the Bitcoin
Mm,
ETF, right? They convinced their board to shovel money into the Bitcoin ETF. Most
mm,
companies probably went on a wait and see. All right,
yeah.
we're going to do this, but we're going to wait and see how this performs over a year through each part of the cycle, and then we'll make our decisions. Now, the
Hmm.
second group that missed out on Bitcoin when Ethereum popped out, when the Ethereum ETF popped out, that's when they jumped into action,
Mm,
right? That's when they're like,
hmm.
okay, we missed Bitcoin, we're not going to miss this one. And then they suppressed
Yes.
price for months and months and months while they loaded up. Ethereum went from damn near bear market lows to all time highs in like 2 months.
Yeah, that was crazy. That's insane.
So that's what happens when institutions suppress something and then they get to their number that they're looking for and then they take their foot off your neck and then price just
100%.
goes. So that's what I expect for the next bear market.
So now ETH didn't quite get an. Oh wait, did we get a new all-time high on ETH? We did just, didn't we?
Yeah.
Like just a whisker.
Mm-hmm.
Yeah. What's that mean in market cap? Did it get to 500 billion or 600 or something like that? I don't
I'm
know.
not sure. What are we at now?
Mm, market cap
Dun-dun.
high.
Yeah, 527.
Okay, there you go. Okay. So if we get a $1.2 trillion Ethereum market cap, that's like what, $8,000 Ethereum or 9,000, $8 to $9,000 Ethereum.
Yeah.
It's pretty good. And okay, like a trillion is a hell of a lot of money, but to think that Bitcoin got to its size, look at the size of Nvidia, got to 4 trillion. And then I guess it becomes subjective if you think it's worth that much. The market took it there, but it's like, yeah, there'd be a lot of leverage as well. But damn,
Well, things are gonna be frothy towards the end of the cycle, right? Like we're
yeah,
we're
yeah,
trading things at
overvalue,
valuations that are way above where they should be.
right? Yeah, it's a deviation above the mean.
Yeah. We'll check it. So if we
Yeah.
look at market cap, if we look at assets by market cap,
Mm.
keep doing. There we go. So Bitcoin is right underneath this push on silver. Bitcoin was, you see silver pumping, Bitcoin dumping. Um, Silver is the next target, and then you're talking just
Mm.
FANG stocks after that.
Oh yeah.
Amazon, Google, Apple. But ETH is where you at Ethereum? Did they update you yet? You should be in the 500s. Why don't they have ETH on here?
No, he certainly did make it on there at one point.
It's number 23.
Oh, there
Oh
it is.
shit! I'm looking for.
23.
All right, thank you. All right,
It's a big
so
boy.
right underneath Mastercard, and then you popping above S&P or you're popping above the Spider, Visa. This is really what we're talking about, right? Payment rails. Now,
Mm.
it's just part of what ETH does, right? ETH is more like the internet, but it is a big deal. You always see us compare to the transactions of Mastercard and Visa because that's the current system, right? That's how
Mm.
everybody buys shit basically online. So seeing ETH pop up above that be good. And then all of these ETH killers out there talk about flipping ETH. XRP now is a bit closer, right? But
Mm.
at the beginning of at the top of the last bull market, Ethereum was light years away from Bitcoin, right? But the closest alt was even further away from Ethereum,
Oh hell yeah.
right? So talking about something like a Solana or XRP flipping Ethereum is actually more difficult than talking about Ethereum flipping Bitcoin, which we all agree isn't going to happen. You know what I mean?
Yeah, I
Just to
don't
put
think
it
so.
on the spectrum of like possibilities. Well, with Ethereum's performance, if Ethereum stops performing, then when Ethereum was down at 1300 and XRP was popping, that's when all the flipping talk was going on. But for that, Ethereum just has to stop moving. Right? It's hard to beat the total value locked inside of Ethereum.
Mm.
And it's just about caught up. Right? XRP is at 35% year to date. And Ethereum is at 31. Let's see, who are the biggest winners here year to date? I don't know what the hell Forum is. But apparently this thing's up 847% year to date. OKB obviously knocked it out. OKB, Chronos, Hyperliquid. These are all sort of obvious ones just because of recent price action.
Yeah. It's like every cycle, man, like the cat gets more and more out of the bag. And it's gonna be real hard to push like to stop that and to kill that. You know, people have seen too much of it.
Too
Like the
much
genie's
money
out of the bottle
invested.
kind of thing.
Yeah, there's too much money invested.
Yeah.
I saw a stat the other day that was crazy, where it was the total it was the total money lent against Bitcoin. It's like all-time highs, literally at all-time highs. There's just way too much money invested in the survival of Bitcoin for some
Yeah, man.
politician to say something for like
No, exactly.
these are the people who
100%.
control the red phone in the president's desk when shit goes wrong and that phone goes off and it's like, hey, you gotta relax,
I mean, the biggest and most important government of the world is getting involved in Bitcoin. Like that's a really big deal. Like what's bigger than that? Like who's got more control and power and influence over that? No one. I can't think of any entity that has more like say in what goes on around the world than the US government, to be honest.
When I first got
So
into Bitcoin and in the beginning, the replacing the dollar talk was really big, right? But Bitcoin was so small, it just sounded ridiculous, right? Like
yeah,
even me,
yeah.
I was like, yo, I'm in it for the revolution, but y'all are crazy. Like we're not, And now,
Yeah.
to fast forward to 2025, where literally the amount of Bitcoin that somebody buys, the amount of Bitcoin that we all buy, which makes us buy stables that actually back their shit with bonds that support the dollar. It's like, whoa, hold on. Like we're getting close. You know what I mean? Like we're getting pretty close to
Yeah,
what
for sure.
the old heads used to talk about.
Exactly. The current system is only as strong as the existing generations that used it as a tool are like around to keep it propped up and keep it the status quo. Younger generations will come in. The world of tomorrow is going to be run by our children and their children's children. You know what I mean? Like there's going to be a point where the torch gets passed and the world becomes what they make it, you know? They're the decision makers. So like, yeah, man, the younger generations are probably the most likely to embrace and push forward the ideas of crypto, and it is happening already. And
Well,
the
we
old
already
guys are still
saw
in
it.
power.
We are
Yeah,
we are them, right? Like
we
now
are.
we're
Yeah,
looking at the
millennials.
generation after, right? But for the
Mm,
generation before us, they were saying these kids are going to change the world, and that was us.
yeah,
You know what I mean? So
yeah,
I think the most valuable thing this generation did was decide to stop asking shit to change and just changing it,
yeah,
right? Like the
yeah.
protests, the sit-ins, the all of that shit. This generation said, you know what? After what happened in 2008, right? Occupy Wall Street popped up and that started bubbling. And then Bitcoin came out of the ashes of the collapse and everything.
Mm,
At that point, I think there was a conscious decision made by this generation to just run a parallel system. Like, you know what?
yeah,
We
hell yeah.
can't change it. We can't reform something that's operating exactly as intended. Right? The legacy
Exactly.
system is operating exactly as designed. All the shit that we hate about it is not a bug, it's a feature. It's built in.
Totally.
So this generation
And
said,
we've
you know what? We're gonna do this. Y'all do that. Eventually, you're gonna realize that this is a better way, and you'll come over. And if you don't, screw it. We're gonna be over here. And that I think is crazy.
our
Like that's
generation.
super revolutionary.
Hell yeah. Millennials we've grown up, we're so used to change. Like of all of the generations of humanity, we've seen the most technological change in our lifetimes than any other generation. And maybe the next generation, the one under us, the younger one, will be even more so, and it'll just keep getting more and more. And yeah, we're more likely to embrace something new than someone that's been used to a system that they were got used to for 40 years plus.
Yeah. They revolt to it. Go talk to like your grandparents or like an older uncle or something and tell them that you plan on taking all your money out of the bank and banking with self custody and bro, all the you'll see the fight. You'll see the resistance. Right? No, you can't do that. No, it's a scam. You're gonna lose your money and you keep it where it's safe. I know it sucks, but it's the best thing we got. Like it's almost like that Stockholm syndrome, right? Where like the hostage starts to take on the identity of the captor and shit. I can't tell you how many times I got told save my money. Just make it, save it. You're gonna need it later. Just whether it's in a shoebox or a bank account, just stack. That's the worst possible thing you could have done. One of my homeboys, right? COVID came, and he was never really up on his luck. Like he's always kind of down on his luck, and he was one of those people that saw more money during COVID than he'd ever seen. Right, way better than any job that he ever had, whatever. But he had that in his mind, and I used to always talk to him about investing. And he called me like about a year after COVID, and he was like, "Bro, I saved all my money from COVID. I haven't touched a single dime." And he was like proud of it, right? Because like, look, I got all this money to invest, and all I kept thinking was, "Jeez, bro, Doge was at 203, like, you know what I mean? Yeah, you held it, cool, but you just missed one of the biggest generational sort of opportunities to turn that money into something right in the middle of of one of the hottest bull markets we've ever had." So it's a different mindset. To him, it was a complete W because he hadn't spent any money on bullshit. To me, I just kept looking at the money left on the table. You know what I mean? Like through this whole time, I'm telling him about investing. I'm talking to him about crypto. It's not like he didn't know. But that hesitation, you'll sit there and plan for years before you ever like move and do anything.
Hey, Dbloc, I got a question for you.
Yep.
So let's just kind of future trip for a second. Fast forward 18 months or whenever you feel that the bottom of the bear market would be in. How much of your net worth are you willing to put back into Bitcoin?
I mean, you're asking me personally, or what do I think is a good idea? Because me personally,
either or.
I'm in. This shit's got me. You know what I mean? Like the majority of my net worth sits in crypto. The most I'm ever out of crypto is during the bear market, and I can't wait to get back in, bro. Having all that fiat just like that shit feels like a weight. Like you're literally losing money by sitting in stables or sitting in fiat. So for me, it's pretty heavy. I'll usually always have at least 15-20% on the side that never goes in, just for those times where we have a big ass crash or something, and you know what I mean, to be able to take advantage of like big dips or like life shit, right? You want to be able to cover all your expenses in case something happens, some health, something pops up. You don't want to dig into your investments to be pulling money out to, get that repair on the house if you don't need to. So having that money on the side is valuable. But as far as what I'm gonna make during this bull market, I would say about 90% of it is going back in at the bottom.
Right on, that makes sense.
Now,
Can I chime in on that real quick
Yeah.
just to validate what you're saying? because my real life experience also, I think, validates exactly what you're saying. And this was, gosh, it's close to 10 years ago now when I was 45. My husband, my late husband now, was 50, got diagnosed with early onset Alzheimer's. No, I was 49. He was 55, early onset Alzheimer's.
Damn.
Yeah. In the middle of my career, I was in finance and worked 24/7. He was in the building industry, both of us successful. Everything we had was according to the way we were taught growing up, 401k, Roth. Every kind of asset that you could have, non-liquid, is where I'm going with this,
Mm-hmm.
is because that's what we knew. That's what we told. That was security. Do you know when I had to liquidate every single penny we had to take care of him because I was not about to put him in any kind of a facility that was not going to happen. And then obviously towards the end, I couldn't work.
Mm-hmm.
I came out with less than 50% of all of our assets
Yeah, it's horrible.
because of penalties, because of my age. It was the most eye-opening experience I've ever gone through, obviously. And then we had the financial downturn, and I knew people and I financed people because I was in banking that had their homes paid off, lost their jobs, had all their money tied up in their homes, couldn't pull it out because they couldn't qualify anymore. Perfect credit, no job.
That's
So
crazy.
it's nuts. So I teach my son, everybody my grandson, everybody, keep keep a certain large percentage liquid. However you want to hold it, make sure it is liquid, because when you get your assets tied up in the mainstream financial system, if you're younger and you have any kind of a situation happen that's unexpected, like what we had happen, you're just you're hosed. I mean, it just is. It's unbelievable that we had all this money, and I walk away with probably, honestly, after taxes, 45% of it,
Crazy. Now
which
run.
goes nowhere when you have $100,000 hospital bill because he was in the hospital for 10 days, and
Yeah.
that was this is a 5-year span, and his illness was short, comparatively speaking. It will financially wipe you out if you don't keep liquidity somewhere on the side that you can pull from. Just like you say, keep your dry powder for those emergencies, keep your dry powder for life
Yeah.
emergencies as well.
And now
Anyway,
think about that same feeling, right? And now run it forward to a company that's operating $50 billion asset, right? Or $50 billion worth of assets on their sheets. The amount of red tape and shit that they have to go through to be able to liquidate in case of an emergency is
yeah,
why they're so interested in Bitcoin. Right? You can go right now and press the button and liquidate all your Bitcoin if you need to in a second and have
yeah,
that in your bank within 10 minutes. You know what I mean? Like that's what liquidity is, right? That's
yeah,
why
that's
they're so
big.
interested, because being able to
Yeah,
dip into that liquidity. Not only that, but being able to dip into an asset that in 5 years is historically been higher. If you've got a 5-year span, no matter when you buy Bitcoin, you're going to be in profit in 5 years. Even if you bought it at the top of the bull market and you went
you think
all the way
crazy.
down to the bottom of the bear and then rode it all the way back up. Not the
Yes,
best idea, but the point is 5 years is nothing to these corporations. 5 years,
yeah.
that's not shit.
It seems like a lifetime with us in our society where we want everything now. And still, even at my age, it still seems like 5 years. But
Looking
when
forward,
you
but
really,
look back 5 years, and it feels like
yes,
yesterday.
that's exactly right. That is exactly right. That's a really good perspective too on the corporations. I hadn't really thought about that. Yeah, because you can't just go in and liquidate, even
They
all the
have a
red tape you
massive
had to go
problem.
through.
BlackRock has
Yeah,
a massive problem, right? BlackRock's problem is success. BlackRock for the past, 100 years has accumulated the most massive bag of fiat and fiat-based assets of probably anybody on the planet, right? As an organization, they understand the basement. How do they get this money into the? They're not thinking about how do we make $1 billion. They're thinking about how do we get all of this money into the future 20 years without losing half of it.
mm,
That's the scale that they're thinking on.
yeah, wow,
So you open up an ETF that settles in
yeah,
cash and not kind, which means when you convince people to buy Bitcoin, you buy the Bitcoin, they get the ETF. When they sell the ETF, you get to give them money out of that big bag of money you're trying to get rid of, and you get to keep the shiny Bitcoin as a replacement. And
gosh, yeah,
slowly, as years go by, they'll be out of that problem, right? They'll be out of the fiat, they'll be into the Bitcoin, they'll save themselves all that debasement.
it builds the argument that you said the other day that that had never occurred to me was they could fork and kind of run with their own
They could.
pseudo Bitcoin.
Yeah.
And if they got large enough, which they probably will, and if they had, I mean, if it was beneficial to them, they don't care about it. They just care solely about their community.
Yeah, the thing is that
And
I don't think institutions are in a real big hurry to kill the unicorn,
I
right?
don't
Like
think
they
they
just
are
had something dropped on their lap that literally solves all their problems. So it's like, do you go against the grain? You know what I mean? Are you gonna just kill the unicorn, or do you just go with the flow of what's actually been working?
I think it's
right.
the golden goose.
The
It
point is,
is.
we need to make as much money as we possibly can. So when shit
Yes.
does eventually hit the fan, it's something that's happening underneath us and not above us. You
That's
know?
that's exactly what I was just getting ready to say. I don't think a fork of BlackRock would happen anytime soon because yes, it is the golden goose, but there's always some nefarious thing underlying when you have a golden goose, and it could be not even in our lifetime that it would happen. But to echo what you just said, we've got to take advantage of this whole market and the knowledge that we have about it. Uh, and, a lot of people are saying they're not taking showers and not eating and everything. Don't, for crying
Hmm.
out loud. You've got a window of time here that we have an opportunity literally of a lifetime. People have said that numerous times on here. And sometimes I, sometimes I think we think that, sometimes I think we say it, and then sometimes I think a few of us really go, "Wow, it is a lot opportunity of a lifetime," because once this next cycle comes, like you said, this bear market, once this next cycle comes, and the game starts changing because it's expanding with different players, then even though we'll have a good foundation, it's still the gauntlet. I mean, we are still running the gauntlet. Gosh dang, every single day I make a trade, I'm in here, and that's exactly what I feel like. And first night, the guy up there running the gauntlet and looking for over my shoulder and forwards and backwards at everything that could possibly happen. That even though I'm new to the trading side of it, I just feel like even from, several months ago when I first started trading and learning, it's so much more intense now. And you're just you have so many more things coming at you in these trades.
Yeah.
It might just be me being a little bit more familiar and more aware, and not just getting stopped out on every trade. I actually get to stay in a trade for a while, but the advantages that we have, like I went and got my nails done the other day, a couple of days ago. I sat down, my little Asian nail girl who's about 30. She says, um, I asked all my customers, do you know what crypto is? I started laughing. I said, you're asking me if I know what crypto is? And she says, yes, none of my customers know. I said, you're kidding. She said, no, no one knows. And I said, okay, Ann, you know, when I have my phone out here and I keep showing you the market and telling you you need to start investing at your age, and I told you that I don't invest in the stock market? She said, yeah. And I said, it's because I'm investing in crypto. And she just blew her mind. It just happened to be the day, Dbloc, that you told us about crypto.com exchange.
Mm-hmm.
So I had her download the exchange. So I'm just literally, I said, this is the opportunity of a lifetime for you and your family, because she, bless her heart, she and her family own this nail salon. She works 24/7. There's nobody else in there. Her mom is not in really good health, and she bears the load. And their culture, somebody got in an accident, so they pull all their money together, and she helped with the accident. So now she's down on her savings, and she says, I need to be able to build my money faster than what I can make it. And I said, that's crypto. That's exactly how you do it. And she said, so I buy now? I said, no. And so then I had got the opportunity. You're going to start buying in the bear market, and tell her about the 4-year cycles. And by the time I left, she was so stinking excited. It was adorable. But I actually, I got in the car and I thought, what an opportunity she has. She has no idea that she could change her and her family's life in the next 4 to 8 years, and honestly not have to work 24/7 like she does. It's remarkable. It's just remarkable. Anyway, go ahead with your analysis. I didn't mean to
No, you're good.
ramble on here. I just wanted to, like I said, jump in and make sure when you say have dry powder, really, and have it for not just crypto, but for life.
All right, so real quick, we haven't popped out of our weekend trap yet, right? Let's compare it to last weekend. We were looking at this earlier. If you guys have been here for a while, we've followed these weekend traps for a while. I always talked about watching for market maker to lose control over the weekend, right? As a sign that we're getting towards the end part where things go parabolic, where market maker can no longer sort of control price, right? So we had our Jackson Hole speech. We didn't even hold that trap through Friday. Literally fell out, completely fell out. Found our bottom on Monday. Interestingly enough, and I told you guys I wasn't gonna do this, and I'm still not. Right? I've seen other people do this, but other people say no, market maker was in control the entire time. This was the false move down, and then it ended on Monday, and then we had a 3-day up. All of that is true, right? We did end up finding that bottom on Monday. We did end up having our 3-day up, but that's cherry picking, right? The metrics that I follow to see whether market maker is in control, which is him actually holding the trap at least into Saturday, didn't play out, right? So I can't take any credit for that, and I don't think anybody should. This was, and then when we look at when we look at the manipulation that we saw on the way down, is obvious, right? The entire way down, we had manipulation next to that support, the break, broke it, a couple more here, and this is on the 15-minute. On the 1 minute, this thing is littered. So we know what this. I know what this is. This was a short ladder attack. Now, this, in my opinion, is where market maker did start to regain control. Right? And then the fight happened again. Another manipulation X there. You go to the 5 minute. Right? This was that fight that we were following in real time. 3 manipulation X's there in a row. You go to the 1 minute is when they were really obvious about it. Right? Broke us out of the range. Hit it again, hit it again, hit it again. So as far as market maker control, this weekend is the first sign that I've seen. Right? And it's still not 100% control. Because if it was 100% control, we would have had a sweep down underneath the weekend trap, in my opinion, bigger than this. That's why I have the question mark here. Right? Because I don't consider this our trap shorts. There are shorts trapped there, yeah. But the amount of volume that came in was like non-existent. Maybe it's less because it's summer and it's Labor Day weekend or whatever, but to me, I rather just trade momentum until I see the signs, the real signs. And for that is this part, right? Getting held in this trap. Market maker algos, remember, market makers aren't on duty right now. Market maker algos right now are managing to keep price in the CME range, which means that the liquidity that's in the market can't overwhelm market maker algos. And if it can't overwhelm the market maker algo, it's not going to overwhelm the market maker, which means that I expect a traditional sort of move out of this. Now, since we have no trap shorts, and let's just for shits and giggles say this is trap shorts, right? Just for argument's sake. For me, any move out of the bottom, this is going to trigger a false move down because there are no trap shorts. Just leaving the range would be enough to free anything that's there at all. But let's say that there is, and let's future trip into the week. So I'd be looking to come down, right? Maybe sweep up, get this liquidity, come down, have our falls move down, right? Into Monday, find the low sometime at Monday. Doesn't have to be this low, it could be anywhere in this range. Right? This could happen here, here, here. Just the directionality is what I'm showing you. And then we have our 3-day up. All right, trap longs, trap shorts, another weekend trap probably before we get moving. But this should be what brings us out. Now, we'll know when we come down through here. When we come down through here, if we start seeing these manipulation X's pop up again, right, and start stacking the way they were stacking, then we know that whales are still trying to push price lower. But if all we do is come down and sweep this liquidity, clear the board, find the low on Monday and move up, then there's a good argument for this being the bottom. Now, let's take a bearish outlook on it. Let's go look at the macro real quick. So the only range that matters, right? We've been talking about this for what feels like months now. We can't close a weekly candle underneath that range. We have 1 day and 1 hour left to bring this candle up above. It doesn't seem like a big difference, right? It seems like, well, who cares? It's just here. It makes all the difference in the world, right? Because what we're looking at here on this side is our highs. These highs that we took, right? This range from that wick to the bodies, that needs to act as support. If that doesn't act as support, then this entire move right here becomes a deviation. And the problem with that being a deviation is we understand how that works, right? If you come back into the range, I've said this a million times. If you deviate out of the range, you come back into the range and you hold support in the range or get resistance, right? Basically get included back into the range. You'll seek out the bottom of that range. And the bottom of that range for us is 101K, close to 100K. Right? It's this range that we've extended a bit now. Right? This move here extended our visible range, which means there is a chance we only come down to 1. That would be our downtrend, and that would be the value area low. But the range itself that we've been in is this range here. Right? And if we don't hold above those bodies, then that's going to be considered an inclusion back into the range. And an inclusion back into the range would make price seek out bottoms or something that would stop it, right? Whatever comes first. So with that in mind, our bearish scenario here would be that in the next 24 hours, we have a false move up. And then we start trending lower. Oh, okay, that would be horrible. If that happens, we're shit out of luck. My bad, hold on. So if we pop up and come down and start trending lower into tomorrow's close, then we've got problems. Because that means we're being accepted back into that range. So we're on a bit of a time crunch. If that was to happen, then this is what I would expect. If we have a false move up and end up having a 3-day down, then we're going to start opening up the possibilities of new lows here. Right? This SR flip at 104, in my opinion, would be where we trap shorts. We would have a dead cat bounce that then comes into a weekend trap. And then our next weekend trap would be down here. And at that point, it's not looking good. Right? At that point, like I said, we come to this part here where we're accepted back into this range and we're trying to seek out that downtrend. Let me show you. So just to show you what we're expecting from the candle, because we've been in this. If you guys were here when we went to 74 and popped, you'll remember this range, right? The only range that mattered at the time. Exactly the same thing that we're looking at here. It was based off of the tops that we needed to hold. And this candle is this week's candle that we're in now. You see how this candle came all the way down underneath that range? And then it came up and it held right in support, right where it needed to. That's what we need from this week's candle. Right? We've already come down. We've already made the wick. Right? We've already swept the lows. Now we need to close back above. And then you see the candle that came next after we held that range. Right? That's when things turned around. That's what I'm looking for.
But
Now,
the second candle, the green one, also had the, like a sweep down to like scare people.
yeah,
So
you
we could
did.
expect.
Yeah, you just didn't close under. So the problem with, all right, what I would like if I could just make whatever happen, I would get that 3% up and we would close above 112. Right? What that would look like on the monthly is what we did here. Monthly candle came down all the way down through that range. It has that weekly candle we were looking at. But by the end of the monthly candle, it had closed above the range, holding that top as support. If that happens, if this happens, if we take up that part right there, then in my opinion, the next candle is up and to the right. Like we're gone. If that doesn't happen, if we close inside the range, right? Still don't get accepted back in, but we close inside the range that matters.
We have like 2
Then
days
the
to do that. Like,
problem's gonna be that the next weekly candle that pops, we're gonna have to watch for the entire week to see if it closes under. Right? So the next weekly candle's job will be just hold support. If we can close above 112, the next weekly candle's job will be pump.
You know the example you were using before, the other candle, the 96,000 or whatever, that you're saying it's similar, maybe from 74? But when you said congratulations to all the people who either held or bought the dip, you had serious discipline. I kind of feel like that's the same thing that's going on right now. Like
Oh
you can
yeah.
get scared out really easy.
Yep. Only because I'm trying to be more PG are these things called the only range that matters. They should be called the don't fuck it up zone.
Yes.
Exactly the same thing. Pardon my French.
so how would that look like on like the following days? Like we have a Sunday, which is low volume, and then a Monday, and then we close the month.
Yeah, so I want to pump up above. Let me put the line on the chart actually, so we don't have to keep going back and forth. $109.22. So this is where we need to close the weekly candle above to keep shit from getting spooky.
You think that we can do it based on how we moved this weekend? Also, wouldn't it be like weird if we like popped up on Monday? Sorry, on Sunday. Wouldn't it be like a, you know, a false move Monday?
What's good about this is that we're so close that even a false move up, as long as it happens within the next 36 hours, right, is going to be a good thing because it'll bring us above where we need to be. What happens during the next weekly candle is less important than what happens now, right? Because those weekly closes, right, that body underneath that range is going to trigger macro investors to react, right? That changes the chart. So
Could we have
what
a
we're trying to
3-day
do is we're trying to
retracement?
keep a nice looking chart.
What if we went up, tested that purple resistance up there
Hmm.
by Monday, and then had the 3-day down?
That's fine. I
Can
don't.
we hold the low to the 3-day down?
Can we what? Sorry.
Can we hold the lows like to not get lower than
These lows, you
107?
mean?
Yeah, yeah, yeah.
It depends. I mean, that the liquidity, in my opinion, would get swept in that case. If we were to come up, have a false move up, and it didn't go any higher than that, then our 3-day down would sweep this liquidity. Would take all of that out. But more importantly, if the timing of this is right, coming up to this move here would give us that weekly close above that line that we need. This is more important than anything. This is more important than getting lower prices right now or pumping or the next 36 hours getting above this range and closing anywhere up here. The higher, the better. But at the very least, above that line.
And if not, what do you expect?
Oh, my expectations don't really matter. I mean, the chart is set up for it. The only problem that we would have, in my opinion, is if retail, for some reason, sentiment is so bad that they don't want to jump in and we can't get above this 200 EMA.
Yeah, that's
Price
what I mean.
comes up and rejects, and then we start running into, a time crunch. Let's see, when is...
Plus, it's the holiday weekend for American anyway.
Yeah. If we want to talk about intentions, I think whales are more likely to want that to break than market makers. Market makers don't want to deal with having to fix the sentiment. There's tons of targets above for market maker, vector wise, everything that we've left. They're not going to be in a big rush to crush the sentiment because then it costs them more to get where they need to get. Whales want cheaper prices. They don't care. They'll run this shit to the ground if they're allowed to. So their being low volume to me is good right now because low volume means market maker has more control over the market, right? Which means that if they want price to get to a certain point, they could literally just clear the orders between where price is and where they want price to be, right? Because if there's no volume, if there's no liquidity in the market, if the order books are thin, then they're the ones that fill the gaps. But them deciding to not fill the gaps is what can make price jump on low liquidity. What's going on, YouTube? Got 164 people watching and 56 likes. Just slap that like button. Just as good as a donation. Appreciate it. So what do we think, YouTube? Do we get above that line? Does the weekly candle close above 109.2?
I'm pretty sure it will. I'm just scared of the 3-day retracement.
They love to cut it close, man. Can't tell you how many times we've seen things come up to the very last minute.
Technically, we could just, as long as it goes above on UTC midnight, right? And then we could go back down. For the
Yeah,
next
yeah.
week,
After
right?
that, look, you want to have a bloody week? Cool. Just chill for a second. We're trying to do something here. You know what I mean? Let us get this done. And then if you want to go ahead and run it, then cool. We'll deal with that when it happens. But at least we'll have a whole week to be able to get back up above the range. Which is why I said I really wanted to close above 112. Right? Closing above 112 just releases all sort of stress and anxiety. You're like, okay, next candle is going to be a green candle up and to the right. Now we're just sort of pushing it towards the end of this week. If we get it, we'll breathe a little sigh of relief and then back to business. Now we got to watch, for another week.
What about Crow? What do you think about it right now as it
It's good.
looks?
They're just retracing. I mean, these things, they pump so hard, like both of them, Fifth and Crow. But Crow looks decent. Crow looks like it. Let's see how much of a correction we got. 30%, 31%. That's not bad. Looks like it's flagging out. When people start feeling okay about Bitcoin again here, they're gonna go back to what was running. It's Crow and Pith. And Crow's got a further along setup. Right? We had our downtrend, broke the downtrend, retested it, pulled away. Pith hasn't even broken its downtrend yet. And I guarantee you both of these are on people's monitors right now. So it looks like that rotational play that we talked about, right? What we called
Yeah,
this out as
exactly.
being a daily rotation. It's still viable. Right? If you play this
I'm
right,
long from the W, like from the W from the bottom, but I also open the short and I'm thinking about closing it. But if Bitcoin has a 3-day retracement, I'm like, should I leave it or should I not? You know,
I hear a lot of indecision, and you can tell by the way, by the way that you're hedging like every bet. You know what I mean? It's like,
yeah,
but I mean, it's smart.
I'm scared
It's
of
smart. It's you
pro.
gotta. It's smart. It's better to do that than to have like an ego and say, oh well, no, it's this is gonna. It's like if you're not sure, then it's better to hedge your bets. Yeah, but we need to work on getting the confidence up in your TA so that you can have a better idea of.
Usually when I like, you know, uh, when I draw something on my TA and I like have a thesis, it usually happens, but I'm like so traumatized by all my losses that
Yeah,
I'm like, I
takes
should be
time.
safe if I open a short, even if I'm wrong.
Yeah, I say that all the time. I'm like I no matter how sure I am, I always remind myself you're the same person that did whatever XYZ stupid shit you've ever done in your life. You know what I mean? Like
Yeah,
you've made bad decisions before, you've been sure about shit before that ended up being wrong. So just remember that before before you start getting too confident.
yeah. The thing is that Crow is like, like it's not so new on my radar, so I'm not like familiar with how it reacts to Bitcoin, and that's why I'm like asking you at least because I'm sure that you can tell like if Bitcoin goes down, do you expect Crow to like follow it exactly or
I mean, if Bitcoin goes down, Crow will go with it, in my opinion. But depending on what dominance is doing, and depending most importantly on what ETH is doing, right? But if Bitcoin goes sideways the way it is right now, all you need is for ETH to just show some sort of sign of health, like you're seeing here on the 5 minute, and the alts will just follow suit, right? And then the alts with the most amount of mind share, like the ones that have recently been pumping, Pith, Chainlink, Pro. That's naturally where people will go to once they start feeling more comfortable about Bitcoin and Ethereum. And right now, Bitcoin and Ethereum are looking good. Bitcoin sideways, Ethereum up means Dom is dropping. That means anything that has mindshare can run right now if people just buy it.
let's see what happens on Sunday night.
I got you, random. Give me a second. It's a $50 one-time fee, and then you're stuck with us for as long as you stick around. I'm really interested to see how many people are going to stick around for the bear market.
I'm here and I'm gonna be here. Even if it comes down to like 10K, I'm still buying.
Yeah, well, I'll be here. I'll be trying to do some more like recorded content during that time. Get a little bit more into my quote unquote influencer bag. That shit is so gross to say out loud. But so yeah, so we'll still have the live streams, but there'll be times where I'm recording and doing shit, and live stream will be off. But Discord is gonna be active through the whole. Discord's gonna stay active through the whole bear market. It gets a little wild in here during the bear market. You get a bunch of degens with money burning a hole in their pocket.
Yo, Dbloc.
Yeah.
Do I see is that a cam on YouTube right now?
Yeah, yeah. Cam's been up for a while. I forget Discord people can't see the camera on
Yeah,
YouTube.
we
I gotta
can't see
figure
it.
out a
I
way
just
to
checked
put it
the
on the Discord.
Yes, sir. Yeah, I just had to give the YouTube video a like, so I was just checking it out, but I saw the
Appreciate
cam
it.
and I was like,
Appreciate
damn. The setup is pretty sick, bro.
I appreciate you,
Dbloc,
bro. I
what
used to have the cam on all the time, like 2 years ago, 3 years ago. Actually, during the bear market, like I
Yeah.
said, things would get boring. But I've had it set up for a while. I just wasn't turning the camera on.
Yeah, yeah.
Somebody was trying to say something.
I don't want to talk over you. I was going to ask you what the two curved screens you have married together. What are they? If you don't mind me asking.
49-inch ultra wide. There's one 49-inch ultra wide, and then there's two 32 inches put together. So it's 3 screens on the curve.
What do you have? The Samsung or another brand?
What do I have? The 49-inch is a Viotech, it's like one of the early ones that came out.
Okay.
But that thing is held strong, man. If I was to get them now, I'd probably get like that G9. The problem with the G9 is the curve is aggressive.
It is. The 1,000 curve. It is.
That's really
The
aggressive. To
the
look at
OLED's
every day,
less.
it's a bit much.
The OLED's less curved, but it has burn-in issues. Obviously,
Yeah.
it's known to burn-in issues. There's a lot of models of the G9.
But they've got some good ones, man. There's good alternatives out there with less of a tight. I mean, unless you're running like a sim, if you're running a sim, yeah, get 3 of those G9s and slap them together and just make a little cocoon for yourself, But even charting sometimes, even moving the arrow across a chart or drawing a line on like a sharp curve. At first, the novelty is cool, but day after day after day, yeah, a bit much.
Yeah.
I would probably go just flat monitors on my next setup personally. Like, don't get me wrong, it looks cool, it's been cool, but you get more pixel space if you don't go ultra wide. I would probably go like 632-inch regular format 4K monitors.
I already have two 55-inch 4Ks, two 32-inch screens to the right of them, and a 55-inch to the next to the other two
Nice.
Screens. One of them broke. My cat broke one of my screens because I had some bad cable management going, and I think I told you the other day about this probably. Anyways, so I have to replace it. That's all. The screen still works. It's just annoying because there's one spot of the screen that's cracked and it doesn't work properly in that one spot.
Lucio's making a good point. They do add a lot of heat. The 49-inch is significantly hotter than the rest of the monitor.
Yeah, you're burning your face and your brain. Too many screens pointing at you.
Yeah, I'm pretty sure. Like my circadian rhythm is gone, bro. My circadian rhythm sounds like dubstep. That shit is all out of whack right now. Too much blue light.
I just figured out I can dim the blue light on all my screens through Windows last night. I guess you could too.
That's possible, Bebo. I don't know about the whole fact thing, but let's go take a look at our walls. So we've been here before, right? 24-hour top and bottom swings. Both of these will get taken. Top liquidity is the target right now. So we got some interesting prints all the way down to 105, but light 100 here, 100 there. 361 sitting at 106.8. What I'm more interested in is there anything that can keep us from getting above that 109.2? Right? These are the walls here that interest me, because these are the ones that we have to absorb to not close that weekly candle underneath that range. Tariq, I try to do like a cost benefit analysis, right? What's the cheaper move? How much total liquidity is on each side? What would it cost to get price to move to that range, right? Are there any imbalances? Are there any vector gaps? Are there any fair value gaps? Is there bullish momentum, right? All of those things matter. Price is going to move towards the highest amount of liquidity, expending the lowest amount of capital possible. So we don't always get that calculation right. Right? It's a hard calculation to make, but that's the calculation I try to make when I'm making that decision. So above us, we've got 123 Bitcoin, 109 Bitcoin, 127, and then at that point we're up above. The only thing really keeping us from 102 is about 400 Bitcoin. The only thing really keeping us from 102 is AC. You got an open mic, brother. So this is where we're at now. Again, we need to get above that 102.9. I mean 109.2. 109.2.
So base case is tomorrow weekly close. We're gonna be around that 109.2 point, and then next week we could still be sideways, right? As long as we come back up 109.2 again.
Yeah.
By the end of next week.
Yeah, that would be the base case. Anywhere underneath it would be our bear case. Our bull case would be somehow magically closing above 112 in the next 36 hours.
How many weeks of sideways can we go before this starts looking bad?
I mean, it's a timing thing, right? So it's like the longer it takes to go, first of all, decision is going to have to be made by rate cut. anyways, we're not gonna go. I could see us maybe going sideways, consolidating or regaining some ground to then, right? People sort of sitting on their hands. But we can't spend too much time just bullshitting. We're cutting into our profit at the top, time wise. You know?
Yeah, but I don't think they care about that. Only we do.
Yeah, exactly. So we bounced off point of control there. If we take out these highs, we can start digging through our liquidations. Let me let's see how. All right, so warning to headphones users. Just gonna see how active we are currently. Sometimes it's easier to hear it than see it. All right. Let's go. All right. We start going through these liquidations and they're forced to cover, we'll start to see that order book light up. These are people who are trading the range and are taking profit at the top of the range. Your range traders. I think we're at the top of that weekend trap, so. What we need to see now is your breakout traders start to step in. Oof. I think Soul is next up. Parabolic, personally. Next up in rotation. Batter up. You see how you can hear when it goes bad? Yeah. All right. Let's let that react. We'll see what happens at the top of that range. Now we can look at M2. So M2. This is what we're interested in. We have taken out our first lower high on M2, right? Which is good. Basically double topping off of our second one. So if you do your downtrend, and we've broken out. If we take these out, if we take these tops out, then in my opinion, this cycle lasts at least to December. If this fails, October going into November is the end, in my opinion. We'll know that we're not going to super cycle for sure when price comes down underneath that range, when we take out those lows on M2.
What part of the M2 are we at right now? Is it where that green vertical line is?
Right here. Oh, right now?
Yeah, right now. All right. Hopefully we're at that little crater right there.
We're about right there, yeah. What people were freaking out about is they're like, well, it was supposed to turn around here. And because we were looking at this, how this lines up. Right, so that top, right, this move down, this is in timing here. Right? So here is when we were like, okay, it looks like we're gonna pop up. But that's when the whales, you know, that short ladder attack that we had or whatever. And people were like, oh, the correlation is dead, blah blah. It's like, guys, this thing can decorrelate up to 20%. And let's see what the current correlation is. I'm running 105. Some people run 95. Some people run 100. See, so we're decorrelated about 21% in the last 30 days, right, because of this move here. But we've seen that before, right? That's not. Let me see what the other guys are looking at. If we put it on 100 days, then it goes down, right? Because it's less days. So we're only decorrelated 10% on 100 days. And then the 95-day guys, these guys have been the ones running victory laps on Twitter. So I'm guessing this one looks better. The hell, that's even worse. Yeah, so right now the 100-day guys are the ones that sort of have a leg to stand on as far as what offset is Bitcoin following the closest. Right. In the last 60 days, 36% correlated, and then the longer you go, the better it is, right? 73, 88, 87, 91, 92. But the most important part of this whole thing is what happens here. So maybe the charts that you guys are seeing on Twitter, maybe they're just doing this, like maybe they're just showing this part. right? Where you made a new high. But it hasn't taken out the highs yet. It's good though. This looked bad, bro. I'm not gonna lie. This right here had me like, yep, I'm out in October, November. No matter what happens, I'm gone. So just coming up and sort of taking out these tops are good. And the gift that we have is that since it's on a 100-day offset, by the time we get to this point in the chart, we'll already have the answer to these questions. Right? Because it would have already played out. All right. Hey, see, take your eye off of Bitcoin for a second. All right, we're digging through those liquidations now. Your breakout traders have jumped in. If it holds. Decent little uptrend so far. Let's go. Pump it, bulls. Pump it.
I forgot what a pump feels like because we've been so down. I know it's been 2 weeks only, but
All right, let's see how we react to the first couple walls that we get to here.
Also those buys.
Big buys. Big buys.
All I could hear was the slot machines. Bling, 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 bling,
That's
bling,
the
bling,
problem,
bling.
bro. It feels too much like a casino. It puts me in that mindset. You know what I mean? Like, after an hour of that shit, I'm just like placing bets.
it is definitely like a casino. All these green and reds, people placing their bets.
Mm-hmm. Place your bets. And this is aggregated all the major casinos in one order book.
Is this an app or like what is this that you're looking at right now from Binance?
No, it's
It's a terminal.
It's just an order book heat map, sort of, called Kill Taco. There's a bunch of different ones. There's Coinang, iBlock.
Okay.
What it does is so this is the order book, right? These are all the standing orders, where they're at in real time, and those are the single dots above price, right? But what the heat map does is it keeps a record of prior orders, right? So it lets you look back and see, okay, there's a wall there. You know what I mean? It gives you more information than you can get just by looking at the order book, because you get the historical data to look back on, especially if like you walk away from the chart. You can usually follow pretty closely trading the order book if you're just sitting at the computer, but if you walk away and you see a pump, but you can't tell if a wall got spoofed 12 times before it happened, or Just more data.
Wait, so what are the? Can you explain a little bit again what the squares are on the top?
These are orders in the book.
Okay.
Above are sell orders. Right. So for price to move up, it's got to absorb 66 Bitcoin here. You see it moving in real time, 64, 64, 63. So as people go placing orders on the book and taking them off, the amount of Bitcoin needed to move up to the next level changes.
Got it. And it's so the green. So if it's purple, it's like a medium.
It just depends on It's you can set the colors to whatever you want.
I see.
And basically adjust it. You can have it to where everything shows. Or you can just set it by like anything over 100 Bitcoin. $217 Bitcoin here. So then we look across at the book. Order book's kind of thin is the problem, right? So there's passive traders or passive liquidity, which is the liquidity that sits on the order book. Bids and asks. I want to buy for this much. I want to sell for this much. And then you have your aggressive buyers, which are your market buyers, right? That's your aggressive liquidity. Those are the ones that slap buy button, sell button at market price. That's what moves price. Right? They in turn fill their orders. Excuse me. Yeah, Pith and I'm sure Crow should be about to break here. Let me see. I'm gonna look at this more on a bigger time frame. It's a decent start. You say mooning or moaning? Trying to figure out if that was a typo or if you just a freaky ass boy. I'm just playing with you, bro. My bad. I'm still fighting this throat thing too, so trying not to clear my throat on the mic, but sometimes I miss that mute button. Nah, I thought he said it because I had just cleared my throat. Let's go, baby. So, market maker is providing liquidity in the direction of the price or in the direction of the targets that he wants to hit, which right now, for the most part, are above us. 200 EMA, 800 EMA, vector gap. These are all market maker targets. So we talked about earlier cost benefit analysis, right? For going up. You have liquidations here that need to be taken, same as you had at the bottom. And somebody was asking, how do you know if they go after the top of the bottom? Well, when you add, let's just add the math, right? Let's say there's, 400 mil in liquidations right here. And then let's say that there's another 750 mil in order book imbalances in these vectors, right? And you have the gas that you need, meaning market maker doesn't have to run this on his own. As soon as you hit these shorts have to cover. They buy, they become aggressive buyers, right? Because they buy on market, and then that moves the book, right? So let's say it only costs market maker 250 mil in liquidity provision to get price up. Then we look to the downside. let's say there's also 400 mil in liquidity here, but there's no vector gaps. You've got one vector gap here that probably has like 100 mil in standing orders, and the momentum or the trend is up, right? So it'll cost market maker probably triple of this to get price down because you're fighting against momentum. So it's just a simple cost benefit analysis. What's cheaper, right? They're not traders as much as they're employees, right? And as an employee, you have to make your company money. You want that corner office, right? You want that employee of the month parking lot. And the way you do that is by deciding a cost benefit analysis for your moves and making sure that the market maker is always making money for the least amount of money expended. That's the thought process that I go through when I'm trying to figure out when we're in a tight situation like that, where as a quick look you see, okay, there's liquidity on both sides, but when you go a little bit deeper you can sort of figure out the math. This is the type of shit that I'm gonna have to make a video on during the bear market, right? Because I could really go in depth, but I know I'll have to repeat it 70 times. I'll be right back.
And Dbloc just got the call. We going up, fellas and ladies. That was that chirp, man.
Telling him to press the button.
I just got told to shut the hell up. Can't shut me up. I'm gonna talk. Nah, market maker said too much sauce. Too much sauce on a Saturday. Woo, let's go. So ran through those orders. This is nice. And we're at that point. This is the SR flip that we need to hold for this next 24 hours, 30 hours. So we've
Dbloc, you
got
rocking
some
the
more
old Boost
walls
Mobile?
above us. What happened?
You rocking the old Boost Mobile?
Nah, I just like the
That
old. I
ringtone.
like the old school. I like all the old school notifications, man. Them shits are cool as hell. SMS with the super chat.
Very good explanation.
Appreciate your help, D-Block. Very good. I appreciate you, brother. Appreciate you for being here and listening. Y'all could be anywhere on YouTube right now. Very generous. Appreciate you, brother.
Run these licks, hit the 800 on the 5-minute, maybe get a little rejection off of that.
Yeah, I want to see if this aggression sort of keeps up through these buy walls here. I mean these sell walls.
we go. Here we go. Pop, 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 pop. Eat some more. Blue vector on the 5. Oh,
This
got
is
another
the
green.
this is the area that we've been looking for. Next move up.
Kind of early for the move, no? That means we still have time to go down and go back up again.
No, yeah,
Yeah.
yeah. It's one of those things, right? Like you want to get out of the danger zone, but you don't want to like use all your ammo too early, and then have 24 hours and you're retracing and you're like, But I like it. This would be the ultimate goal: is getting above 112 before the next weekly candle closes. Wait, hold on. Remove this. That's not 112. Is right around here. But you know what the problem with 112 is? The problem with 112 is if we do hit that and you guys didn't buy the dip, then you probably missed out on some lower, the prices we were gonna get. Closing a weekly candle above 112 for me sort of closes out any possibility in the short term of coming down underneath 107.5. Probably a better way to.
I feel like we got like a little gap from like here to that 111.5, 112 to a degree. Dbloc.
From
It's kinda,
110 to
well,
111, you got a big volume gap, and this whole
yeah.
thing, this entire thing here is vectors.
Oh, there goes that red right here. Yep.
Go back.
Yeah, we're getting some selling here.
This is the 200 we were talking about, right? Can we get above that 200 and hold it as support? 200 on the 15-minute is your 50 on the hourly. So we go to the hour. We're looking at a classic retest of the 50 EMA, and we know how important that is to get over. And so this changes calculations a bit if we manage to do it. Now, if we don't manage to, we also understand that on the hourly, we have the right side of a W. And so if that does reject, we know how this works. We gotta look for a high. Hopefully that SR flip. Right? Look for that lower high. And then we would have our W. Hopefully this happens quickly because we don't have too much time to be playing around. We would have 24 hours for that move to play out if it was going to play out. We're not just going to do it now and hold. I'd rather come up here. Fuck. I got auto aim on my mouse.
That'll give us enough time to roll over and maybe like get to that that line you right, tomorrow.
I would want to do this now, and then come back and then do this for a W, and at least put some ground between us and that line. You saw that, right, Eric? My mouse snapped to somebody on a head glitch down here at 162. Yep, that's a fact, Bebo. The short-term holder, long-term holder ratio is crazy. It sometimes looking at that chart and just watching like short-term holders sell off and long-term holders just stack. One of the most beautiful things. Like smart money, dumb money, or whatever. You know what I mean? Like however you want to phrase it.
Hey, you know, the short term holders, something could have happened. You know, you never know to them. Dbloc, where they had to let some go. You know.
The rates that we saw it take off is just, it's what it always is. It's fear, right? FUD. How many times have you heard that the cycle's over in the past 2 weeks? Yo, the YouTube chat's been crazy.
Yeah.
People have been coming in here talking crazy in YouTube chat. Like, Dbloc, when are you gonna stop lying to people, telling them? And it's like, bro, I get that you sold your bag or that you're in the short that's profitable right now, but you gotta take a breath, bro. You gotta breathe. You're gonna lose your shit. And I don't tell anybody anything. I'm just telling you where my conviction lies. You know?
Yeah.
Listen, if you bought Bitcoin at 15K, what am I gonna tell you?
For real.
You bought Bitcoin at 15K, you sold it at 124.
Congratulations.
Bruh.
What a great move.
Good job, bro. See you at the bottom of the bear, you know?
Mm-hmm.
So goal here again is to get above that 200 EMA. If we do retrace, you're going to want to see us hold the top of this range of support. Or again, deviations.
Oh, see how that 15-minute closes out.
The shit that I repeat often is because it happens often and it's important. Right, so if this is our range, and that was a deviation out of the range, and we pop out of this range to the top side, and we don't hold support here.
Mm-hmm. Be careful for your deviation back through.
It'll just be a deviation.
We've seen it play enough.
Holding support here is what you want to see.
And that would maybe be, and of course that would kind of indicate market makers maybe got some more control back over.
Yeah, I mean, like we said, they're not gonna pay for the whole trip, right?
Mm-hmm.
So their cost benefit analysis doesn't include for them paying for the entire trip up. So they'll give you the break of your range, which they got.
Mm-hmm.
They'll give you the test of an EMA, and then it's in your hands. So this is the part where I say market maker takes his foot off the gas and he tries to see if retail has interest. If retail has interest, he's more than happy to clear these vectors and eat these liquidations. If retail doesn't have interest, he just set up a trade. That green vector is market maker short positions. But he's more than happy to come down and fill his short positions. And give you that support, hold, and then that retail sentiment at that point will kick back in. Right? Because people that are doing TA will see, okay, price came down. Right now, people are doing TA like, oh, I don't know, it hit 200 EMA, I don't know. But when it comes down and it holds support, market maker gives you a vector at the bottom of this, then you're like, okay, that's a range breakout with a retest, right? Then your confirmation traders come in here, and they'll take it the rest of the way. So it's like a fine balance of eating liquidity and keeping different types of traders involved so that you don't have to pay for the entire shit.
Damn, is Dom about to crack 57?
Look at ETH must be running really nice right now because
let's see.
Hey, yep, there you go. Look, if you ever want to see what Dom is looking like, you just like invert ETH.
Yep, just cracked 57, 57.98.
Everything should be popping, guys. If Bitcoin is going up and Ethereum is going up,
if dominance is going down.
Yeah, put it this way: if your alt isn't moving right now, you got to look at it pretty closely and try to see why. Because we should be getting green bubbles across the board.
Yeah, it's either because your alt already ran recently or your altcoin sucks. What's up, y'all?
That's good, Drew. Yeah, everything's up 3, 4, 5% for the most part.
How's Pump doing?
My portfolio is green.
I'm doing good. And Farcoin's doing even better.
Pump those farts, ladies and gentlemen.
Pump is pumping.
Welcome to Keeping It Real with Drew.
Nah, pump is actually looking decent. Let me see. I was looking at it earlier. I mean, it's finally down into a range where I can consider. Right, because it didn't violate its W. Right, so this is where it became interesting here.
Yeah, somebody put in a lot of buy orders at 3.5 to make sure that 3.5 holds. There's fat orders on Coinbase just holding at 3.5.
Yeah, I mean, they ran a decent play in the beginning. Oh. Right, they gave you your W, they gave you your accumulation, they gave you your measured move, give or take. But this was what was sort of interesting to me. I needed to see what happened here.
Dbloc, have you heard of MNT?
Mantle?
Bybits coin?
Oh no. Hold on, let me draw these out. These are your lower highs on or like I like to call them like confidence targets. And every time you take out one of those lower highs, you can be a little bit more confident. You said MNT, let me look at it. Hold on, let me see what's going on here first. Jasmine Bitcoin leading the pack. Oh. Part looks good.
Yeah, it's supposed to be like Bybits coin.
It's an exchange coin.
They're trying to crime.
Like an exchange token.
It's like BNB. It's like a BNB.
Yeah, I mean that's like a narrative right now because what OKX and Crow did. So exchange token narrative is pretty hot right now. People are looking for like the next one. You know, it's just what people do. But it's a very technical move. Yeah. Supporting resistance. It broke out. It retested. Broke out again here and retested. Broke out again there and retested. Like it's not doesn't look very impulsive, right? It's kind of just off and to the right. Very clean. It does look like it's downtrending though. I would wait if I wanted to get into it, I would wait a little bit here. Even if you're bullish, is it? Yeah, so you would have your bull flag here that you've been putting in, pretty clean. You just double bottomed off of support, right? So whenever you break a bull flag, it either has to be a buy order, support, something has to stop the move down. Right, so when I see bull flags into like a double bottom of support, it's pretty strong. And you see how it reacts to the 50. Came up to the 50, held 50% of the range. You can get yourself over this cluster, then maybe you're looking at like a breakout scenario. You've got big liquidity here though, as far as supply. Right? And it's a mix of orders and like underwater orders, trapped holders. And the way you know that is because you'll get a resistance. And you'll get a point of resistance that gets tested and fails. And so you know there's supply sitting here. So that would be the only thing. If it did pop out, I'd look for some sort of rejection at that point. But it looks good.
Yeah, I just feel like if you think Bybit's gonna do well, it's for sure something to look at.
Yeah, I mean, I'd have to let's look at the tokenomics and see if there's anything that looks crazy. That's why I thought it was Mantle. MNT you said, right? What's the, oh, yeah, what's the actual name of it, though?
It's Mantle. Sorry.
Oh.
Okay.
Okay. It's not an exchange token. But, I mean, Mantle is still a decent project.
Yeah, I was gonna say it doesn't sound like that would be Bybit's.
Yeah,
token,
that's
right?
not an exchange token. But it does, the chart still does look strong. 6 billion total supply, 6 billion max supply, 3 billion circulating. Have any unlocks? Where's the unlock information? I mean, it's not bad though. 350 mil daily volume, 3.8 bill market cap. I would like to see higher volume. I'd like to see much higher volume than that on the daily. Fully diluted at 7 bill. Chart looks good though.
Dbloc, do you ever publish any of your trading views?
Nah. No.
Would you consider? Is there a way to contain that? Is there a way to do it for members?
Yeah, I mean, I could look into what, I could look into how it works, but I think you can. I think you can have a private group, and only the private group can see whatever you put in there.
That would be awesome. Not that, I mean, I know we can always add we can add our views ourselves, but sometimes it's nice to be able to follow along one to one. I don't know. I mean,
Yeah.
not necessary, but
Only reason I haven't done it is because, well, a couple reasons. One, that I don't. Without me to explain the chart, sometimes I worry about people looking at something, not understanding it, and then making a move off of it. But more important than that, I just don't want it to be a crutch for anybody. Like, if you could just pull up the trading view chart and it just adjusted itself and changed whenever I change something, like, I feel like even if you're following along on your own chart, just having to do it yourself builds those synapses. You know what I mean? Like,
That muscle memory, yeah. Just... Because it's like wherever you're at, if you got service and you could pull up trading view, you can just, like you could chart out. That's one. I mean, it's the skill, skill in the bag,
I mean,
right?
like for an example, I'll be in bed and my phone, like you can kind of zoom in on YouTube, right? But you're like not in a charting, you're not in a charting environment, but you kind of want to see like, oh crap, are we breaking the range or whatever? Do I need to go downstairs and get on my computer, And you can't zoom
you don't have
in with
Discord on your
YouTube.
phone?
Yeah, zoom in on Discord.
Oh yeah, I don't because of my
Discord lets
policy.
you. Yeah, Discord lets you zoom in. You can like pinch zoom all the way in.
That's a good point. I should just get a separate phone from work because I have profiles on my phone, and so those profiles are separate, so the work doesn't interfere with personal. But they also have like flat out rules. They're like, if you're going to put your work profile in here, here's the apps you cannot install, and that's one of them. They're afraid that you're gonna. They're not saying it's malicious. They're saying that it's way too easy to drag and drop a document into Discord.
You can zoom in on YouTube. You know that?
I wouldn't want to take that risk as a company. There's way too many scams on Discord and like malicious links and shit like that. Yeah, I understand that.
So yes, I know you can zoom in on YouTube, but it just on my phone, it's the resolution is, it just, I don't know, it doesn't feel as smooth. It feels wonky to me.
And it's on 720 or 1080, right?
Yeah, you got to make sure on the phone. My phone always sets it to a low ass resolution.
No, YouTube does that like almost by default for the most part. A lot of the times.
There's a loophole. You can leave your Discord open on your desktop and set a remote viewing on your phone and view your desktop from your phone, and you're not installing Discord. Ow.
Yeah, I can't install a remote view.
I was just about to say, if they won't let them have Discord, they're probably not going to let them have remote viewing.
No, they've thought of it all, man. I miss the days when they weren't thinking of it, and I was able to get around it, right? And I can't get around it today.
Okay, even without a remote viewer, I'm sure there's an app you can just like have, let's say your webcam, you can just have it pointing to your screen.
Oh, there's a lot of things you can do to get around it, man. It just comes to the point, is it easier for me to just walk downstairs and get into my computer room and stare at charts, like
Yeah, you should have a second phone, a personal phone anyways.
I think I'm gonna, especially there's a lot of great new phones coming out now that are even more powerful than the one that I have, and I have a pretty nice phone too, but it's just, man, it's hard to keep up. I think they're deliberately slowing apps down too, because like I feel like Coinbase is running like crap.
Apple's notorious, bro. Once you got one or two models deep, they're gonna slow your shit down. I haven't had that problem with Samsung or Android.
Yeah, mine's an Ultra 24, I think. Whatever the 1-year-old one version is, but I just noticed, man, there's a term that it's, I don't remember what it's called, but there's a term for that the industry will deliberately
implied obsolescence.
Yes.
Yeah, they give things a life expectancy. A good case study in that is Xbox. Remember the original Xbox, the big brick block Xbox?
Yeah.
Do you know anybody? Do you know exactly? Do you know anybody who ever had to buy more than one of those? And then they realized that like there's no money in this, right? So the next Xbox, the Xbox 360, had the 3 rings of death.
Yes,
or
sir.
The 4 rings of death.
Yep.
I had to buy 4 of those things, bro. And the reason
they were
that
childs in the beginning.
Listen, the reason that happened is because they chose to use a plastic clip instead of an aluminum clip on one part of the disc tray, knowing that over time heat would loosen that part and there would be some implied obsolescence or a life expectancy. And then they just like, oh, we don't know. We don't know.
Dude, they put themselves in severe jeopardy by doing that, because PlayStation completely whooped their butt in several quarters of
that had a lot to do with that. Yep, it had a lot to do with that. It also had a lot to do with multiplayer games coming to PlayStation, because PlayStation for a long time was like the single player mission action game sort of place, and if you wanted to play multiplayer, you came to Xbox.
SOCOM pushed that off hard. But yeah, man, it even when people would get their ring of death fixed, then they had to like prove purchase and all this warranty stuff. It started to become a hassle. Like people were deliberately.
Let me tell you, I got my money's worth. We're past the statute of limitations, right?
Yes.
It was so bad. It was like at the height of the 3 rings. right? Where honestly, I just started doing the math and I was like, there's no way that they are opening every return box and plugging it in, and there's just no way. They don't have the personnel for that shit. It's literally just coming in one side and then you're getting a replacement Xbox out the other. And the reason I thought about that was because my cat one morning decided to take an entire piss inside of my Xbox.
Oh, well.
Bro, I mean, I pressed the button, it didn't turn on, my heart dropped. You know, Xbox don't turn on. Like, wait, what's life right now? I picked it up and it was just drip, 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 drip. Bro, I dried that shit out in some rice. I sprayed some cologne on it, put it in a box, and I sent it back on a 3 rings return and got a new Xbox.
Yeah, dude, that's because they benefit of the doubt.
Hey, to be fair, they got me legit for 2 or 3 Xboxes already at that point, so they're still up.
Dude, and statute of limitations, I ain't gonna lie, I went and have someone that cracked mine because I was tired of it. Like, if I'm gonna have 3 rings of death, I'm just gonna go get it cracked. And I was able to like play unlimited games because of that. Because I was like, what harm am I gonna do? They're doing more harm just by its default nature of the way it was built. How am I gonna make it any worse by going and getting it hacked?
Yeah.
It was like these guys were charging $50 to hack it. It was like literally just solder this pin to this pin and then give you the software and you were good to go.
Oh, that's horrible, butthead. He said his oldest son, when he was 1, shoved a peanut butter and jelly sandwich inside his PS2 disc tray and smushed it shut. The day after PS2 launched.
Oh, man.
Yeah. That's a love
That's
test,
crazy.
bro.
That's wild.
That's the day you realize how much you love that kid.
Oh.
Whether you realize it or not.
Just launched, just got it. Oh, man.
I mean, the good thing is Moore's Law is slowing down a little bit and it's allowing like a lot of these consoles to last a few more years, which is nice.
Until AI kicks in and speeds it into hyperdrive.
Yeah.
Eventually, AI has to affect Moore's Law, right? I mean, how can it not?
Well, Moore's Law, once quantum hardware starts coming in where it's not taking up a whole room, game over.
I'll be right back, y'all. Give me a second. That peanut butter and jelly sandwich story made me hungry. Let me see if my food got here yet. Be right back.
Oh, I thought you were gonna say you're gonna go make a peanut butter and jelly sandwich.
Nah, I might just. If my food hasn't gotten here yet, I might just make one.
Oh, Billy, just drop a little bit more.
For as a cat owner, I would recommend a product called UPS. It literally erases any urine smell completely. It's freaking awesome.
That's the name of it?
Yeah,
UPS?
UPS. Yep.
I don't have cats, but
It's not cheap,
I'll
but it's so worth it.
I'll pass it along. I will definitely pass it along. Oh, bro, yeah. Mhm.
No, it's not United Postal Service. You should work. It's called urine pre-spray. It's made by a company called Hydra Master.
Any of you guys trade Centrifuge? I think it's looking pretty good. Looking healthy. CFG. Ripping. Nap time. Waking up at 3.
Hey, Dbloc, got a question. Dbloc, can you hear me?
Hey, Joe, I think he went to eat.
No, I just saw his chart moving. I kind of had a question because he's always checking out where people have like large buys and sells at those specific areas. But I'm wondering, I was thinking about it earlier today. Do we have any way to look at where people have stop orders set in those places? So not where people have so much buys at those areas, where people have their limit set for stop limits.
Gosh, I don't know.
So if big people have big orders to sell or
Yeah.
big stop limits at certain areas, are they
Yeah,
just
that's a good point.
it's just as important as buys sometimes because once they hit and trigger, they drop things really quickly, you know? So that's what I was just wondering if anybody saw that or knows where to look for that one.
I have no idea, but that's a good thought. I mean, that's a good question. I know the exchanges can see your liquidations, particularly because they hunt you down all the time. But I don't know if there's a chart or a indicator or anything like that. That's definitely a D-block question.
Because we see that all the time. Sure, there's liquidations for the futures. He was just kind of looking at where there's big buys below us, then there's big buys or big sells above us. And they're usually like those big yellow ones when he kind of flicks over to that volume size and he kind of goes down and then we can see where big orders are placed. Just wonder if we can ever see where stop limits are placed. And yes, I'm sober. I'm not drinking anything. I promise you. No White Claws.
Let's go, Solana.
All right, I'm back. What's good, John? Now we just swept that top side liquidity more than anything. I'm not mad at it. If I ever wanted a weekend trap to break, it's now. I just don't want to come back down underneath this blue line. No, the deviation out of the trap doesn't mean anything, guys. I'm just talking shit. You guys know we can deviate out as long as we don't free the trap longs or trap shorts. It's just regular business. Unfortunately, I do expect this to come back into the weekend trap. Hopefully just to put in a lower high though. I mean a higher low, sorry. Let's say we come up and take the whole vector like we were talking about. And you can have a situation where you come back into the trap, but you're just putting in the right side of a W. No, it's still above us, Lord. Last week's CME gap is still up here. I've been in this trade since here. Just took profits, put it back in. But that top CME gap is still my target. Excuse me. Like I said before, we got to close the weekly candle, monthly candle above this range. So the last thing I want to do right now, you know, with just a little bit over a day left, is to just go crazy parabolic just to take it all back and end up closing under, right? I'd much rather build some support on the way up. Slow and steady. And the alts are already moving, right? So we don't have to worry about see what's moving right now. All right, well, all our on narrative plays are up. Right, these are all of our Department of Commerce mentioned crypto projects. Link, Sol, XLM, AVAX, PIF, OP, OL, and ARB. And on the 5-minute, they're all up and to the right. This is what I'm saying, right? Like, if the alt that you're in isn't eating off of this, unless it already had a massive pump like PIF did, right? PIF is allowed to retrace a little bit because PIF just did this shit. But if your alt doesn't have a reason for not moving, then usually the reason is that nobody wants it. Right? Not enough people are thinking about that alt. So buy it when it dips to make price go up when everything else goes up. Which means it's either waiting on a rotation or it's just dead. But yeah, everything looks good there. Link is behind. I'll show y'all Link because Link is the camera's hiding Link. But yeah, similar move for Link. Good. But let's see what alts are eating here. Goes down 2% on the hour. This is basically my portfolio, give or take. A couple projects right now. So on the daily, this is what my portfolio looks like on the daily. I think I have it against Bitcoin unless I'm, let me see. Is this in USD or is this in? No. Okay, so this is in. I'm looking at it in Bitcoin. Excuse me. So in the past day, everything in my portfolio has outperformed Bitcoin, except for Jito and IQ, which is how I like to sort of keep track of it. Right. In the last week, obviously, Crow, Launchcoin stood out. Everything else kind of fell apart. But let's take a look at it in USD value. Just for my own. All right. All right, all right, all right. Not bad. Monthly. I'll take a look at super. I need to add to my super positions. It might be the move. All right, let's check everybody else's top 100. Very nice. Fifth is down off of its pump too, like we were talking about. Yeah, I saw that, Lord. Everything's reset. Real fear and greed looks like. Probably ticked up today, I imagine. Yeah. Ticked back up today into neutral. So we've slowly come down into that range that we were looking for. On the weekly, this is what we were looking for, basically. I don't know. We'll see if we can break these lows, but that might be it. You know, once you can chart anything, it all works the same, right? Structure on a chart means the same whether you're talking about sentiment, the price of rice, you know, anything. So when you come and you see a resistance like this, right? The now's come and turned into support. It's always worth paying attention to. This weekly MACD, oh, this isn't the MACD. Where's the MACD? So this MACD cross on the weekly was, I know, bothering a lot of people, right? Like, but I just want to remind you, it's not like we haven't had that sort of thing before. We had 2 red weeks there, but 2016, you know, we can't see it on this chart, but even here. So look right before the bull market took off. See how we got that one red hit on the MACD? Right at the base of where shit went crazy. So yeah, it's bearish, but not every red MACD leads to a bear market on the weekly. That's usually how you follow it, right? On the weekly, once you flip red, for the most part, you're either getting a deep correction or you're into your bear market. And then when your MACD flips green again, that's when you start loading back up on assets. So this candle freaked everybody out for the most part. Understandably so. I'm not judging. But if we go to the daily, excuse me, right, this is what we're looking at, a higher low on the MACD. And we're already starting to flip, right? We're already starting to flip pivot or flash pivot. And a lot of people think, well, you have to wait until it gets all the way. Like, no, it's at the pivot to the MACDs that you get your pivots, right? It's at the deepest red that you get your pivot, right? And it's at the highest green that you usually get your retracement. Some people are taught that you wait for the flip, right? You wait for the flip. Like, no, you have to anticipate the pivot. And for that, you need to use other tools besides the MACD. And I think that's why people don't go into detail about that shit. Serbo, the 220 is useful more on legacy. The slow moving macro sort of plays. The 13 and 50 just gives you faster reaction time, sort of like closer to the pulse of price for scalping. What I don't like about the 200 strategy is the 200 is such a slow moving average. And for the most part in that strategy, it's only used for momentum, right? I use the 200 because of that, right? The 200 is a good, hold on. The 200 is on my chart because it's a good guide to whether things are bullish or bearish, right? If you want to look at your overall momentum or your overall sort of trend, right? If your 200 is sideways, then you're likely consolidating. Right? Your 200 starts to turn up, then you're ranging. But by using the 50 and the 13, I think that you can dial in like a higher definition and get underneath all your 220 traders. It's very successful on legacy though. I mean, I guess in crypto too, but you're not getting anything out of it that you're not getting in the 13 and 50 if you just go to a different time frame. Like if you don't want the 13 and 50 to be so responsive or so quick, then you can go on the daily, right? Or you can go on the 4 hour. And on the 4 hour, it's going to be way more responsive than the 2200. But what it comes down to is earlier entries and exits, right? Like look right here. Let's assume that that 13 was the 20. They're not going to be far off of each other. The 13 and the 20 are going to be pretty close to each other anyways. But if your exit signal was the 15, right, then you're getting out in, oh, pardon me. Then you're getting out in this range, right? If it was the 200, then you're down here and the majority of that short is already gone. So it's just about responsiveness. And this is the 4 hour too, so that's why it's such a big gap, but just as an example. That answer your question, Serbo? All we're talking about at the end of the day is trend tracking, right? And for that, you need a slow moving average and a fast moving average. There's tons of different combinations. In my back testing for the way that we trade and the asset that we trade, this gives you the least amount of fake outs. It's just more aggressive. But that might not be good for some people, right? Some people might want a slower strat that gives them less entries but longer trades. Twisted Gloomy with the 20 gifties. W gifts, W mod. Appreciate you, Gloomy. Everybody who just received the free membership from Gloomy, the thank you in the chat. And then, I mean, you might as well subscribe, right? You're already a member. Might as well hit that sub button while you're at it. Yeah, Sleeper. And that's with subs slowing down too. I was looking at the analytics and it says the subs are like 36% less than the last 28 days. And we still hit it in quick time. I think that's all over YouTube though. It happens every time we dip. The baby's good, man. Mom and baby are locked away doing their thing. Yeah, I mean, I've been looking at them like per sector, but I haven't been. Nah, I'm not really into the numbers that much. Where I'm looking in, just every once in a while when I jump on YouTube Studios, it gives you like a little replay of the week. It puts together like this little montage for you, and that's basically where I get all the analytics from. Yeah, I saw that. I saw that. That's one of the bear market, bull market tops and bottom indicators that I look at. When YouTube viewership in general goes up, when Coinbase and Robinhood are like the top of the app store, shit like that. When people are paying 5x the retail price of a Labubu just to see if they can get the mystery color. Oh wait, that's already happening. There are some top signals, I'm not gonna lie. I can't be completely hard. So I've been shitting on the bears since like 49, Right, we went to 74 and went down to 49, and they're like, it's the bear market, it's all over. And I'm like, shut up, you're stupid. And then it goes to 100 and comes down to 79, and they're like, it's the bear market. I'm like, shut up, you're stupid. But I mean, going to 124 and coming down to 107, like, I'm just saying, like, shut up. Like, I'm leaving out the you're stupid part, because there are some top signals, right? Even though I think they're wrong, but I don't think anybody's dumb for considering that you have to start worrying about signs that we're topping early, you know? I don't see them, but what I'm saying is it's a way better argument than it was at 49K. And I don't think anybody's stupid. I'm a kid. I love that sound. That was gloomy, Rosa. I just noticed on the camera, I've got all the LEDs in the office set to white, right? Like bright white. I just noticed on the camera that it's so bright that it's coming through as like blue. That shit doesn't even look white. Actually, looks kind of cool. It looks like a white light that's throwing out blue color.
The dress was white.
What was it? Golden black or blue with white stripes?
It was
Remember that shit?
golden blue, I think.
I hate when social media plays with our brain like that.
The sun is finally setting and I can go out for my walk. It's so hot today.
Yes. Yeah, Hendo, we filled like almost half of it already. It was all the way down here earlier, so we're moving on it. It'll probably get left. I mean, I don't want to come too far away from the weekend top, because, like I said, I don't think we leave this just yet. I think this is just a deviation. I guess only time will tell. What would be interesting though, because we were talking about the possibilities of a false move up or a false move down. The fear of a false move up is that it's followed by a 3-day down, and nobody wants to come down underneath these lows again, right? People are spent. They're like, look, that's it. You got all my money. Just do the thing now. But if we come up and have a false move like this, then chances are a 3-day is at least going to come take all this liquidity.
There's a lot at 105 too.
Yeah.
106.
The alternative to that would be if we have that false move up. True false move up has to take out these longs, right? So if we have a false move up, and then our 3-day down only brings us down to that spot where we need to hold. My problem is that we have 24 hours to close above this line for that weekly and that monthly candle. So if we're going to do it, cool, let's do it. If we're going to come back down and then pop back up, then we have to do it now. right? We don't have too much time to just be sitting around bullshitting.
How much time do we have? Like in weeks?
Oh, I'm talking about just for the weekly close.
Oh.
24, like 33 hours, something like that.
I was thinking though, like in your green bar graph.
Oh, the dates are still the same, October.
That's good. That's just good.
November. October, November to end. M2, we're looking at M2, right? And it's starting to take out those lows we were talking, or those highs we were talking about. So there is a chance that we extend, but right now, if everything remains the same, then end of October, right? That's what we're looking at. Right around my birthday. Now, I am kind of bullish that, my birthday is going to be bullish. And when we look at what M2 is doing during my birthday, we're still popping. So, we'll see. But this sell zone, right, that we have up here, drew this a long time ago, before M2 was even up here. So watching it start to do this up here after it's just been trending up lets me know that at least I'm in the ballpark, right, of where I'm thinking about getting out. Unless we pop out above these highs, and then we can start talking about November, December. But we'd have to see it. Either way, I would expect a big retrace November, if that's the case, right? Even if it keeps going, this is not going to look good on the chart.
I've been kind of pondering whether or not this, this entire 4-year season that's been so Bitcoin heavy is like just the pops we've seen on some of our alts. Like, that's it.
The problem is that the pops never got a chance to grow into anything because of quantitative tightening. So we didn't have that money printer on that makes you buy the dip on an alt and it goes up 50%, right? And then your next paycheck comes in and you're like, oh, hey, my alt's still up. Let's put some more money into that, right? They never held their ground because there wasn't enough money to support it. So things would outperform Bitcoin and they would go crazy and then they'd give it all back. It's like, if you look at dollars, if you look at dominance in dollars perspective, you'll understand. We were at 66% dominance. Right? That's $6.60 out of every $10 in crypto in Bitcoin. That means every other coin is sharing $3. And then the problem got worse because as coins went not holding their ground, people started speculating more and pulling profits more. And then you just start moving from narrative to narrative. Okay, if we only have $3, let's put the $3 all in one place, right? And everybody would pile into one coin. And as soon as that was done, everybody would pile out to the next narrative, whatever happens to be running at the time. It's because of the macro chart, Sergio. The reason we have to close the monthly above there is because of this chart. We take all of this off the chart. These highs right here, right? That wick is roughly at about 112. The bodies, all of these bodies, are sitting at about 109.2. If this is going to be considered a breakout, we have to hold support at the very least on the bodies, or else it's going to be considered a deviation and we'll have to come all the way down to 101. Right, so if we turn all of this back on, this is why I was saying no weekly candles. Look at our weekly candle, y'all. That's so beautiful. So that's what our weekly candle looks like as long as we're above that blue line, right? It looks like this weekly candle. Last time we were in a range like this that had to hold, we had this deep drop on the weekly candle, just like we did here. And at the last minute, it came back above and held. And then we had an explosive green candle out of that range. This is what we're trying to do here. If this candle closes underneath this line, then it signals a deviation and people will target 1 and target 2, right? 104 and 101. That's a range deviation. If it holds, we're shooting for all-time highs. That's how important it is. And if it manages to hold above 112, like if we manage to shrink this entire candle up and it closes above 112, then we're seeing all-time highs sooner than later. Yeah, that's why it says it's the only range that matters, Sergio. This is the only thing on Bitcoin chart right now that matters. I don't care what other charts anybody else is showing you or what sort of shit is floating around. For the next 2 days, this is all that matters. And it was just as important here. It was just as clutch here, and we pulled it off. So if we did close above 112 in the next 21 hours and 36 minutes, it would look like this monthly candle, where we had a monthly candle come all the way down through the range that matters and close above. And then the next monthly candle after that, well, you know what happened there, right? So that's what this candle would look like if we managed to close above.
It would stay red though, right?
It would stay red. Yeah, we're not going to flip it. We'd have to get above 115.5 for it to flip red. But it would be a stopping volume candle or a long tail doji, right? Which is bullish.
And that would look good with your chart you've been showing the monthlies on.
Yeah. This is all
Yeah.
This is all about keeping the macro chart looking healthy to keep big money from pulling positions. Right? Big money is just watching this on the weekly. Probably not even the daily. But if we lose this range on the weekly, profits will be pulled. Right? Because why wouldn't you sell at 109 if you know you can buy back at 100? This doesn't mean bull market's over. It just means we would go into some aggressive positioning and repricing. But we'll pull that chart up probably 30 more times before tomorrow, so it's not going to sneak up on us. If you
It'd be a good area to buy.
yeah, exactly.
That's what I see.
Every day there's usually only 1 or 2 things that are really important and then a whole lot of noise, right? If you can just sort of focus on those 1 or 2 things that are important, like whatever your closest local support is or whatever your closest liquidity pool is, if you can boil your focus down to that, then all of this shit becomes a lot less overwhelming. The amount of shit that I've heard this week, well, what if the pi cycle top and this and that? And like, bro, just let the chart talk to you. Like, why are you driving the anxiety that you're going through, trying to front run whether this is the top or not to save, what, 5% on your take? Like, relax. The chart will show you what it needs to show you. You just got to pay attention. So on the daily, obviously, we want to close above. That's today's goal. But, you know, this daily candle is our last daily candle before weekly. Right? Weekly and monthly close at the end of this daily candle. So to boil it down, this daily candle has to close inside of this range. And then we can breathe a little sigh of relief. The reason I say a little sigh of relief is because there's a bull case, a bear case, and a base case, right? So do it like this. So our bull case would be weekly candle closing above 112. Okay. The reason that that would be bullish is because the very next candle, in my opinion, would do nothing but just pump. Right? It would be a up only candle. The bear case is that we don't close above this range and price comes down at least to target 1. Right? And then the base case, or the Labubu case, if you prefer, is that we come back into this range. Right? The problem with coming back into this range and closing is that the next weekly candle has to do the same thing. Right? Once we get through this week and the candle does close here and that next weekly candle opens, we'll have 7 days to make sure that it doesn't close below that range. So even though this candle, right, did nothing but pump after we closed inside of that range, it still went down first. Right? You see how it came down and it broke those lows and went right back down to like 99 before it pulled up? That's possible with the next candle. Right? We could start the next week. We could start the next week and come down, not take out the lows, and then close above, and then, you know, start to scale out from there. So the bull case is a lot less to worry about, right? But the problem is that if you didn't load up, you're screwed. If we get the bull case, if this thing goes up to 112 and you didn't pick anything up down here, and the next candle's up and to the right, then you missed your entries. Right? Bear case lets you get cheaper Bitcoin, but it'll take longer to play out. Right? And the longer it plays out, the less we're going to get off the top. The Labubu case is the perfect middle ground. You get to come in, you've got the range that matters. You still have the chance to load up a little lower if the next weekly candle comes down. And then you get to play that swing. I hope that made sense. And if it made perfect sense, you might need to check yourself out because, or you've been listening to me for too long. If you have absolutely no questions after that.
I think my name's been written on in that little box on the wall, like every week for the last 4 years. Future Dbloc.
The what?
You know, when you get in trouble, you have to go put your name on the board.
Demerit. Yeah.
Yeah.
The naughty list. Brock, you gotta, you know what I mean? When you want to reach the masses, you gotta talk to them in their language, bro. You start talking about Labubus and everybody starts paying attention. We joke around with it, right? It's like a running joke we've got going, but honestly, it is a signal, right? It's a signal that we're frothy. You don't have a bull market without a Labubu sort of craze. And what that means is like people have money to just throw at bullshit right now. You know what I mean? So whether it's Labubus or Pokemons or whatever it is, whenever stuff is getting irrationally overpriced, you're like, okay, liquidity is up. You know what I mean? We're about to have some fun here. People are feeling rich.
What was it last time? Stimulus?
Metaverse property. Oh yeah. Well, the stimmies are what made the money roll, but the evidence was people spending thousands of dollars for a 10 by 10 inch square foot property on some metaverse that wasn't even fully built out yet.
Sucks because they already got us with like back up your iPhone and pay us $10 a month. Like that's straight up NFT. You're legit creating your own subscription NFT every month.
Yeah, basically.
Really. Yeah.
That's what we're looking at so far, Yash. We took out one of the higher lows, double topped off the other, still have a lower high on M2, but it looks good. Be waiting for the next couple days to see if we just crawl out, put in a higher low or something. But this is what we wanted to see. Remember when we were falling off this cliff here and I remember the day when we lost this support. That support right there. I was like, oh boy. Which honestly, the day we lost that support was, or in the future would be, right? The exit would have been November already. So I'm like, okay, well, that means that my TP is looking right. End of October, November. Now we're continuing to push, and in time, we're at December 9th here. I'm still running the 105. Oh, I'm actually on the 100 right now.
Do they know that we can look into the future like that?
I mean, we didn't invent it, right? Like, people have followed assets through global liquidity. The trick is finding out what the offset is, right? And all that is the delay. On a 100-day offset means from the day that the central bank prints the money to the day that you get it in your hands and you're able to buy a risk asset is 100 days. So the pump ups on liquidity that we see on M2, we don't see them on risk assets until 100 days later. So because of that, we run M2 forward 100 days so that we can stay on track with reaction, right? Which is how we got our pivots and all of that good stuff. So that's what lets us see into the future, the delay that it takes for the money to get. In real time, it's like the time that it takes from you to get paid on Friday to where you can actually get your check, get in the car, go to the bank, cash it. Like, that offset is like your weekly paycheck offset. And then there's some that don't run on any offset, right? Like, if you look at, if we come look at gold, we can just do it right here. So if we come look at spot gold, right, and we remove the offset on global liquidity and go to a 0 offset. First, let's look at the sandbox up here, right? Let me change this offset to 0. And let's hide that. Let's change this offset to 0. So you see how closely gold follows on a 0-day offset? This is with no offset at all, right? The day that global liquidity goes up, gold goes up. The day that global liquidity drops, gold drops. The day that it goes up, gold goes back up. The reason is because when the central banks print their paper, before they send it to you, they use it to buy gold because they know their paper is bullshit. And they buy gold at a 0-day offset, meaning the day the liquidity is released, the gold is purchased. And that's why it runs at a 0 offset. That's also what should terrify you if you're still denominating in fiat. because the banks themselves don't even value that shit. The 100-day was the closest, Yash, but I don't want to go crazy looking for it because this drop that we had from that short ladder attack the other day just took us off of. That has nothing to do with global liquidity, right? That was just straight sell off. So I still like the 105-day in general, and that's the one that I'm erring on the side of. But I'm drawing my boxes for exits and entries around the 95 to the 105-day, right? So there's a 10-day box to give myself a little wiggle room for error. I'd rather be rich than right. You know what I mean? Yeah, we could, Zambrano. That's what I was saying. If we're going to do it, I would want to do it now because I don't want to be in a rush to get back above this line. So if we're going to drop and come grab this liquidity and come back down into the weekend trap, cool. But it needs to be a fast move that starts to sort of build itself back up. I would much rather see us come down and test the top of this range and lock this in as a breakout. Right? And then we'll worry about what that means for the weekend trap later after this weekly candle closes.
Yeah, I did some unstaking because of you mentioned that I think 2 days ago. Yeah, I'm glad you did.
What's your limit? Like what was your cool off period?
I got 29 days.
Yeah, you see? So yeah, that's not the type of thing you want to find out at the last minute. You know what I mean? When your coin is like hitting its all-time high and you're like, yeah, let's take some profit. And they're like, cool. Give us 29 days and we'll get back to you.
Yeah, I didn't have all of it in there, but I'm glad I've started the process. Think it'll still be all right. But yeah, definitely.
I mean, think
Yeah, it's
about it,
the
right?
emotion.
Like how much APY are you really missing out on in those 28 days? Even if
Right. Well,
you pulled out a month early or 2 months early, the amount that you're going to lose on not being able to sell when you want to is probably going to be more than you gained in APY during those 2 months.
Yep.
I need to start taking sponsorships, bro. I'm gonna start putting, get companies like TradingView to put their logo on the back of my chair. That's advertising space. It's not being taken up right there. Toll, I appreciate you, brother, but it's not magic. I promise if you stick around, you'll be doing the same shit in no time. This shit is all learnable. The only part that I think you have to be born with is the passion or the obsession, however you want to look at it. to stick through the shit when it gets rough. Right, the emotional part of it. The TA part I could teach you. Appreciate that, Drizzle. Welcome home, too. It's liquidity levels by Leviathan is the name of the indicator. I'm sorry, liquidation levels by Leviathan. This one right here. If you're in the Discord, I have my settings set up. If you go into the liquidation levels channel, and I've got all the settings set up if you want to match it. It's mostly just aesthetic though, colors, and I changed some of the parameters.
Yeah, I'm thinking about adding that. I look at yours, so I don't have it on mine, but you know, lazy.
Yeah, honestly, like if I wasn't streaming, I would have this shut off 90% of the time. Right? Like I would literally just come on, look, see where it's at, maybe mark my level, you know. But I leave it on just because I want YouTube to get used to the idea of price chasing liquidity, right? As being what actually moves markets. And it's just a really good visualization. Even though there's more in-depth, right? You can get way more in-depth liquidation levels than this. It's just on TradingView, they're kind of limited.
Oh, it's awesome because I mean I got in kind of at the lows, but I'm out now because it's like you know 107.9 or top of the box. If we come all the way down, that's what I'm kind of looking at possibly. But however, whatever. But chased the bottom kind of good this morning. Relaxed, getting better at being relaxed, you know, which is not being over leveraged.
Yep, that's true. And the confidence level that you get, right? Like, yeah, okay, great buys down here at the bottom and all that, but a high level of risk and anxiety, right? Also, you don't know if this is just gonna, you don't know if this is just gonna keep doing that. But coming back in and putting in that higher low now, right? The level of confidence that you can have at these levels or wherever we get that bottom, whether it's here or whatever. Some people wait for that. Some people literally will not swing until they get that higher low. That's just the type 2 trader, right? This is the type of trader they are. What's good is when you get all traders involved, right? That's the goal. So for this play specifically, right? Let's just future trip it a little bit and say that we're gonna go like this, come back down, whatever. Don't pay attention to the levels. The levels themselves aren't important. So it's the type of traders that I'm talking about, right? So your type 1 trader is gonna catch falling knives, right? That's what he's here to do. He's here to swing at bottoms or try to short tops, right? It's the highest risk of all of them, but But it's the highest reward, basically, too. Hold on, let me get rid of this. No, that's not what I wanted to do. That's what I wanted to do. I'm trying to be neat about this, but we'll just do it with this. So that's your one, right? This guy's going to try to catch fallen knives. He's going to try to swing here. He's going to try to swing here. Eventually, he's going to catch it. Right? So he's going to have the best entry. Your type 2 trader is going to wait for a higher low or a confirmation. This is where they feel safe getting in. Low's already been established. Everything's looking good. They'll jump in. Your type 3 trader is your breakout trader. Your type 3 trader doesn't trust 1, doesn't trust 2. He's waiting for a breakout with high volume, and he's going to yeet into, into this trade. Your type 4 trader is going to wait for price to come up and come back down and retest. That's where your type 4 trader comes in. And then at this point, every trader is in, right? Your degen sniper, guy that waits for confirmation, your breakout trader, and then the safest of all, the hardcore confirmation guys. And then when price goes up, we all sell to the 5th trader, retail. You don't want to be this guy. This guy's going to buy once this shit pumps 10, 20%. He's going to FOMO into this shit heavy. So the sooner you can get in on the trade, right? I'm not saying that any one of these is better than the other. It just depends on your psychology. Type 1 trading might be way too stressful for a lot of people. Like, the shit will drive them crazy. They'll be on tilt all day. Type 2 traders, little less stress, right? You don't get the best entry, but it's less stress. Type 3 traders usually in it really quick. He's playing the breakout and he's getting out at the first level of resistance. That's you guys on high leverage trying to break out trade, right? Type 4 trader goes heavier than all the other traders, which is why the biggest moves that we see are after the type 4 traders come in, because they've seen all the confirmation they need. They're just throwing the entire bag at it at this point. And then these guys buy all of our bags as price goes down, and then they go back to the real world and tell everybody that crypto's a scam. This is basically how it works.
Working out on getting out of being a type 1 to being a type 2.
I mean, like I said, one isn't better than the other, right? Type 1s are going to swing at these lows with tight stops, and then they get stopped out. And then you get another bottom, and they're going to swing at this low, then they get stopped out. And they swing at this low, and finally that one holds. That's too much stress for a lot of people, bro. New people can't deal with that shit. That shit'll put them on tilt. They'll be revenge trading by the 3rd break, and then it's all over for the rest of the day. Right? Type 2, you avoid that. Type 2, you wait, you find that bottom, you let price reverse, you let sentiment reverse, you let everything cool down, and then on the first major retrace that you get, right, that's where you jump in. The only type that I have an issue with, real issue with, is type 3 traders. And the reason I say that is because I probably should have said that before I got rid of all this shit. The reason that type 3 traders, I think, make mistakes is because when you're down here and type 1 trader makes his buy, your RSI has come down to its bottom, right? By the time your type 2 trader gets in, The RSI maybe came up a little and then came down a little, whatever. By the time you're at your breakout, your RSI is maxed out, right? So you're getting into a trade with a RSI that's at top. When if you just wait for the breakout, wait for the retest, and buy the retest, most of the times you get a lower entry and your RSI is already cooled down a bit, so you've got a longer ride, right, on that trade. But I understand being super, because those breakout candles are aggressive, right? And if you trade like for a couple pips on high leverage, in and out 1 minute trades, breakout trades are lucrative. I know people that only breakout trade, but it's because of the style of trading that they're doing. Yeah, and this is just the way I explain it, guys. Don't go like in another channel asking them if they're a type 2 trader or a type 3 trader. They're going to look at you like you're crazy. But paying attention to market maker and what market maker does, right? Building these patterns. What market maker's slowly doing is that he's bringing everybody on board. Right? He picks up your type 1 traders there, and then he picks up your type 2 traders, and then it breaks out and he picks up your type 3 traders. And now you're waiting for the retest to pick up the type 4 traders. And at this point, everybody's on board. Then he can provide liquidity and get you to the targets that you need to get to. Me, the way I do it is I trade all of them, right? Except for maybe type 3. So type 1, I'll get in. Type 2, I add to my position. Type 3, if it looks explosive, maybe I'll add to my position. Type on type 4, I'm definitely adding whatever's left. Whatever's supposed to be in this trade that hasn't gotten in this trade yet, when we retest 4, it's all going in. Yeah, Neve. Exactly. Unless I'm catching a falling knife like on a grid. Right? Like if I feel like we're coming down to a level and I leave a grid behind. But most of the time I'm doing it in real time. Yeah. And that same thing happens in reverse. Just to be clear. That same thing happens on exits. Right? Your type 1 exit is you're selling to the ducks. Type 2, you let it retrace and then you sell a high. Type 3, you panic when it breaks support. Type 4, support's broken, but you don't want to sell red candles, so you're waiting for that retest. And then type 5, you sold the very bottom and price is about to move on you. Right? It's the same thing, just backwards. It's the yeah, we're getting highly technical in here. It's important though, right? Because it's important to understand why price moves from certain points. Right? Why breakout trades are explosive. Why, when you see a retest of a price point and you get to that number 4 trader and volume doesn't pick up, right? That gives you a little bit of a heads up that this might be a deviation and not a breakout. Right? If retail doesn't step in and hold their 4, then price is just going to collapse back down into the range. Yeah, now we're retesting. Right? So if you wanted to play this, there's a couple of different levels. Right? Type 1 traders got in here. Your type 2 trader probably got in there. Right? Because our W in this pattern is here. Right? Your breakout traders, if they're not careful, they bought early. This is why type 3 sucks, in my opinion. Right? Your type 2 traders will buy every lower high or every higher low. So type 2 might have added to their position on this dip here. Right? Here and here. Here, type 3 finally bought, popped out, and type 4 is waiting for a retest of these EMAs. So we still have one group of traders left to get into this trade. When we come down to this range, if volume doesn't pick up and this tape doesn't light up, then we know that 4 doesn't like what they see. Right? Remember, these are the most cautious of all of them. 1 wasn't good enough for them. 2, 3, they don't want none of that. They're waiting for an almost sure thing. Right? And if they don't see it, they don't buy. And if they don't buy, this becomes a deviation and not a breakout. And we know how deviations work. If you come back into the range on a deviation, then chances are you reach for the bottom of the range. So all eyes on 4 right now.
Hey, Dbloc, can I ask you a quick question on that last scenario you said there?
Yeah.
I'm trying to understand what a swing failure pattern is. So when on the number 4 person, so when it comes back and retests and you don't have volume and it breaks through and we start, what did you call that? Where, shoot, I don't even remember what you called it. Anyway, where it doesn't continue to go up.
A deviation?
A deviation,
Yeah.
yes. So when it goes up, hits the vector gap where it is right now, if I can see that well enough, comes down, you don't have the volume, it breaks through, and we start retracing back down. Is that called a swing failure pattern when
Yeah,
that happens?
this would in turn be a swing fail. Yeah. Or a failed
Okay.
auction, or there's like a bunch of
Yeah.
different names for it. Yeah.
Okay.
Yeah,
Good.
and you know that it is because it loses the resistance. It fails to turn that resistance into support.
Gotcha.
So like just
Okay.
on a regular scale, like for YouTube, right? Look at this vector gap. Let's just assume that's a range, right? And we're in this range. All right. YouTube, what's this? Is it a breakout or a deviation?
Oh, the other way.
Yes. That's a deviation. What is this? Right. That's an official break. So what makes a deviation is the failure to turn that into an SR flip, right? And as price deviates back into the range, the natural tendency of that price is to seek out the extremity. I didn't mean to talk to y'all like school children. I just wanted to make sure everybody was paying attention. Yeah, Crypto Sleeper. Things like Bookmap just let you see the order book in the past. Right? You can get the same information from just looking at the order book itself. But Bookmap will show you the history of the orders. Right? So you can tell if this order has been there for 3 months, or if it was just placed, if it was placed and removed. Right? You can see the walls that that big money is attempting to create, right? It just shows you an entire historical reference of the order book.
Pay the trader
Dutang
payment.
with the super chat.
Smiley face emoji. Praying
Appreciate
gesture
you, brother.
emoji. Heart hands emoji. Dolphin emoji.
Very
Ocean wave
generous.
emoji. Light blue heart
W super
emoji.
chat.
Spouting whale emoji. Fish emoji. High voltage sign emoji. High voltage sign emoji.
What you're looking for mainly, Rajesh, is imbalances, right? You're looking for large imbalances in the order book that stand out, that would draw price. Right. But honestly, all you're looking for is whether the order book is light or if it's thick, right? Is there orders all the way through the order book? Are they large orders or are they orders that one trade could fill, right? Because when the order book is thick, price goes sideways like this. When the order book is thin, this guy that buys at 108 doesn't get filled until 1094 and price pumps. Right? When price is moving, that's not liquidity coming in. Liquidity is when price goes sideways. Right? Right here in this sideways range, there's enough liquidity to where if anybody wants to buy, they can buy without moving price. Right? They can buy and sell whatever they want without having to push price out. When there is no liquidity or when the order books are thin, this guy that wants to buy down here might have to buy from a seller who refuses to sell for anything less than 1093. If that happens, the order book slips and price moves up. When you're looking at the overlay, like when you're looking at the price itself, what you're looking for is just what needs to be absorbed, right? Like we're watching absorption here. For us to move up to the next tick, they have to buy 70 Bitcoin. Now 64 Bitcoin, 65, 64, 62. So you're seeing it's getting absorbed in real time. 63. Until that Bitcoin is sold, price won't move any higher. Right? So when you run into a big wall of 300, 400 Bitcoin, that's why it acts as a pivot. 67, 66. Remember, prices above are sells, prices below are buys. That's an aggregate of the order book. And then if you turn on your trades, then what you're doing is you could literally do the math, right? If you want to get above 1093, you need 84 Bitcoin, 85 Bitcoin. Now you could come here and change this to, why is this not on Bitcoin? Let's change this to Bitcoin real quick. Where is it? It should let me do that somewhere. I guess not, because it's the book itself. But you would basically do the math and see when 84 Bitcoin were bought up, right? You would run a count, and as soon as you see that come through, like if somebody buys 84 Bitcoin right now, or I'm sorry, if somebody buys 94 Bitcoin right now, that entire order will disappear. This is the type of shit that I want to go really in depth in during the bear market, because you really do have to take your eyes off of the charts and dig into some material to really fully grasp it. But for right now, I'm trying to focus on what's important to figure out whether price is moving up or down, when it's time to get in or out, and how long there is until the end of the bull market. Right, like that's been my main focus. I think that that's more helpful than anything else right now. I don't think going into an in-depth sort of dissertation on global liquidity and its effects during the bear market is going to do anything for us right now. It's frustrating though. It's frustrating for new people because I know when you first come in and you've got that appetite, you just want to learn everything there is to learn right now. But there's a such thing as analysis paralysis, right? And there's more than enough people that'll be willing to sell you, you know, 80-hour course for you to look at or whatever, but all that's going to do is end up costing you money. It's not going to help you right now. That's great news for the Philippines, man. There's a lot of countries that are going to really bring themselves out of some shit. All right, so right now, market makers attempting to build liquidity. Right, these drops down, what they are liquidity harvesting. And so every time price drops down, to these levels, new long order, new short orders start to pile in. Right? When that gets thick enough to where market maker won't have to pay, because remember, every time you clip one of these guys have to buy on market to cover their shorts. Right? So this is a way to force these guys to buy Bitcoin, basically. So if market maker can come and give us a nice little flag, right, or whatever, usually it's in the form of a flag. What this does is retail recognizes this flag and they don't give up on the trade, right? They start to buy the bottoms of the flag. The problem is that bears get so greedy that all they see are higher lows and lower lows and lower highs. And every time there's a lower low and a lower high, they add more shorts. And eventually, the cost benefit analysis is made that enough gasoline is there and market maker will send it.
But wouldn't that be then a breakout instead of a deviation? Like right now, the shorts are thinking it could be a deviation, right?
Yeah, we could break out. We still, even if we broke out from here, right, it still wouldn't be confirmed that this is a breakout because this hasn't retested. But that's something that we worry about later, right? Price could come all the way up. And we could have our false move up and everything. And then on our 3-day down, come back and test that deviation. Even then, if price came back into this range, then this entire move would be a deviation. But yeah, you're right. Sometimes you don't get the retest, which is the problem with type 4 traders. The reason people don't like to be type 4 traders is because sometimes you don't get that retest. Right? So you wait for confirmation and you wait for things to look nice, and then it never comes. Which is the main argument that type 3 traders have. Type 3 traders understand that they're buying at a high RSI, but if they're not like a high frequency trader, if they don't plan on taking profits right here, typically what it is they wait for 4 and then they add at 4 too. But the reason they add at 3 is so that they don't miss out on the times that there's no retest. So it's like you've got to make that decision for yourself, right? Like, are you more comfortable with being underwater Like what bothers you more, being underwater or getting left behind? That's gonna be different for each person. Some people are cool with waiting. I got left behind, cool, I'll wait for the next trade. Some people are cool with being underwater. Well, I bought whatever, if it goes lower, I buy lower, no big deal. But for some people, being underwater will put them on tilt for the entire day. Like they'll revenge trade for the entire day because of it. So that's something that I can't answer for anybody, right? Like you got to sit down with your demons and figure out what your personal issues are, and then find the trading style that best fits that. So everybody, you know, it's not a fun experiment, but sit down in a quiet room, dig inside your head, figure out where all those Labubu demons are hiding and what they want, and you either kill them or you make friends with them, and then you move forward.
I'm I don't know what happened, but after all of the experiments that I have ran in the last 4 or 5 years, I've become very comfortable with being underwater, uncomfortable with being in the green,
That's not good.
and
That's that fear that the other shoe is about to drop, like the other foot's
very.
about to drop.
But as I practice to hold on to being in the green, I then round trip and get liquidated. So that's another one that's happened many times. Or the lifeboat one. I've gotten the lifeboat one a couple times. You're underwater a long time, then it comes back up for you, and then you're in the green for like 2 5-minute candles. You don't take it because you're like, it'll keep going now.
You think it's a rocket and it's a rescue ship.
Yeah. Then it just goes right back down. I guess that would mean that I entered in a deviation part with like I front ran a deviation is what happened. Like you get in a trade and then it goes down, you're underwater, and then it comes back up, deviates out of whatever range it's down there, and then you're like, cool, that was a V-shaped recovery, and then it just goes right back down into the range, and then goes lower and breaks down, and then you get liquidated.
Yeah. It's a common problem. There's at least 3 people on YouTube that are like, "Yup, preach."
Oh yeah, y'all talking the gospel tonight.
Yeah, it takes some work being a 1 through 4 trader. But I mean, honestly, what you're doing is you're DCing into a position, right? Your nice big chunky trade is there. Then you're adding to position. You're adding to the breakout. If you get the retest, you're adding to the retest. If you don't get the retest, you're selling to number 5 traders up top. But it takes like market structure knowledge to not fear buying number 2. Because number 2 looks a whole hell of a lot like you're about to get lower lows, and then you just don't, you know?
And like taking profits at the level, like let's say you did enter here, being comfortable with taking profits at the top of this vector gap instead of waiting for like the CME close, that's another one that's gotten me. The CME has gotten me a number of times and has costed me lots and lots of money because of me thinking it's just going to go and close it right now, and then it just doesn't.
I think
whether it be below us or above us.
if you get into a trade without a target, it's a problem. But sometimes trades don't hit our targets, right? But I think everybody should have a per hour target. If you guys haven't yet, and I know most of you have, but if you haven't yet, go into Discord and scroll all the way down here and go to profits per hour and read this, right? Read it, memorize it if you're having trouble taking profits. You've got to set a profit per hour that you're happy with, right? I don't care if you haven't hit your target, right? If you're going on like a 300 per hour trade right now and you've been in the trade for 2 hours, like you got to pay the trader. If you want to leave some sort of runner or something, I mean, do whatever you feel like you need to do. but you can't give that all back because that's 2 hours of work, right? And if you give it all back, you might as well have just worked at McDonald's for the last 2 hours, even if it's just $8 an hour.
What if you've been underwater for over 48 to 72?
Being underwater is different. Like if it's a long-term trade, I'm talking more for like scalps, right? If you know that you're trading long-term and you're gonna hold it and you're gonna feed into a position or whatever, then cool. But if you know that all your capital is in and you don't have any more to buy the dip on, then you've got to stop taking losses, right? Even if you pull a percentage out, like let's say you're all in and it's gonna keep dropping, you're like, damn, I don't have anything to DCA with. Well, take 20%. Not financial advice. I'm just saying as an example. Take something out of that trade that you can put back in at the bottom, even if you don't have full confidence that the whole thing, you don't want to, because I know how you feel. Well, if I take the whole thing and it keeps going, cool. You don't have to do that. The same way that we get into the trades as number 1, 2, 3, and 4 traders, we get out of the trades the same way. Right? Sell something into those green candles. Doesn't have to be a lot. But when you see that aggression come in and you see that tape light up, let me put it like this. How often have we seen this tape light up and we've seen those green candles pop and it just keeps going and keeps going and keeps going? Not very often, right? We usually get that big dopamine hit, price pops up, then it starts to consolidate and drop, and then everybody starts to argue whether it's a bull flag or an M pattern, or there's no reason for you to be in that trade at that point, or at least to have all your money in the trade at that point. Put it back in once those decisions have been made, but feed the ducks while they're quacking.
Yeah, I'm usually trying to re-enter the trade or something during that bull flag shenanigans.
If you guys don't learn to do that, you're gonna run into real problems when your portfolio gets bigger. Because when your portfolio gets bigger, you can't wait until everybody starts to take profit to hit that sell button, right? Or you're gonna get killed on slippage. So it's best to get into the habit now of selling to these guys, right? Sell to these guys that are pumping, that are like, they're just buying. Give them a little bit. Lock that profit in, because chances are there's going to be a cool down period. And even if you're wrong and it's going to keep going, you can always get back into a trade. What you can't do is get your money back once you're upside down, right? Because then you're underwater just hoping. And that's the worst. Being underwater, hoping and praying, and you're doing all this TA and you're doing all this cognitive load just to get back to break even. Like if you're right, all you get is your money back. Nah, bro, I can't. I don't like to be in that position. I will 1000% just open another trade. That's something we're gonna do during the bear market. We're all gonna load up some cash. Everybody's gonna pick their favorite coin, and we're gonna do like mass trading one day. I'm talking like just in and out and spot. Just in and out spot trading, grabbing, percentages, just to get used to that idea, just to build those synapses that just because you left the trade doesn't mean that you're not going to get another entry. And the bear market's a good time to do that, because any pump during the bear market, eventually is going to retrace. Right? So even if you take profit early, all you got to do is wait long enough and the coin gets cheaper. I know how it feels. You hit a good trade, you caught the pico bottom of something, you're like, holy shit, it worked. And now the coin's pumping and you don't want to leave the trade because it's a good trade. And you don't have the confidence that you can start another good trade because you feel like you got lucky. So then it turns into a gamble. That's what we call the hope part of the trade, right? We try to stay out of the hope phase. Right? I'm here for the impulse. All of this other shit, hope it holds, hope it, whatever, cool. We'll see what happens. If it does, I'm back in. What's going on, Thomas? I mean, 150 has been my base case for this for the top of this market. But that's just the base case. I'll be honest with y'all, my bear case was 125. But I'm not operating off of just price points. But everybody's like, at what price are you going to take profit? Like, it has nothing, my TP has nothing to do with price. It's going to be 1000% timing and on-chain data. I mean, I'm not putting anything out of the realm of possibilities, Ryan. If we get to October, November, and all we got was 125, then that's all I'm getting is 125, you know? If we're at 185, then that's what it is. Yeah, I'll take a look at it for you. I'll take a look at World Liberty for you. Starting to sort of come back from the sell-off. And it still has to prove itself here. Uptrend is intact. This is your local high. These are all your lower highs here that you want to break before you can really start considering this an uptrend. Right? And what we're trying to find out is, was this the higher low? Right? Looks good. Came down to where it should have. But until you take these out and put in the top of that W, and then I'm just looking at the chart. I'm not saying that this is a prediction or anything, because I'm still kind of suspect about this, but this would be our W pattern that we're putting in right now. And that measured move should bring you above 50 cents. Just about 46 cents. Testing your all-time highs, or the bodies of your all-time highs. Has this listed on all exchanges yet? Or does it still have some exchange listings ahead of it? Anybody know? Is it on crypto.com and Coinbase?
I tried to find this coin and I don't know.
Yeah, I was gonna. It hasn't dropped on spot yet, so it's just pre-sale. MEXC dropped today. Okay, yeah, that would make sense for this candle. So if it's still got exchange listings ahead, then yeah, I don't think it's gonna have any problem getting to its 46. I know people that bought on pre-sale, if they didn't sell off, they took a little bit of a bath, but they're looking good right now. I mean, it doesn't have a team that I think is going to let it fail. I just worry about holding too long. I mean, we are talking about Trump at the end of the day. And he's a bit of a wild card, so. But I think getting in at these entries will be fine. This thing will do fine during the year, during the rest of the bull market. If it doesn't get, pulled. Basically found bottoms back to entry. So anybody that got in on pre-sale, any early buyers, let's go look a little deeper. Hold on. Sorry about the flashbang. Give me a second. What's the price right now? They got all of these fake LFIs in here.
It was 30 cents.
Does
It's only on the future.
yeah?
Apparently.
Does anybody have the contract address by any chance?
No.
I'll take a look. I'll find it.
I think you will find like a ton.
No, there's a million of them. Yeah, it's just ridiculous. Trying to see if I can find the right one. It's probably not. It's probably gonna be buried. Sucks because that's the only way I can really dig into the holders and see what's going on there. I'll find the contract address. If anybody knows what the contract address is, just drop it in chat. I'll look for it right now. I think I got it. Oh,
I don't think it's on. I only use Dex Screener for Solana. For me, it's only Solana.
Oh,
Might
you
be I'm
can
wrong.
look across other ones, and Bird's Eye has all of them as well. Let me check. Maybe it'll pop. There we go. Should get it right. That's the right contract address.
So XD, yeah, apparently it's this one.
This only has 44K in liquidity.
Well, it's very strange. The number of holders is going down. Like half of them disappeared in like in like 2 days.
Yeah, the holders.
That's very strange.
The people that got in early on pre-sale and just took their shit and ran, in my opinion. A lot of people that got into this on early pre-sale. There was a couple of protocols that you could use to get early coins. Let this play out for a second. I'll be right back, y'all.
Polygon's looking really good, huh? Mike. Cool. Look at that. Nice.
talk already. What do you do today? What are you eating?
What's up, Dbloc? Where do y'all think dominance is going to end up by the end of the cycle? I think 50% at least. That's like my first target.
Oh, today's Sunday. Mike. The copy.
Looks like a sniper scope.
Dollared work on Phantom Alpha Tall CAN's pump.
Morning, family. Anybody up? Well, in case anybody is, I'll just give a little update. Here we are at the bottom of the range on the 69-minute chart. We're at the pivot point here, and holding 108.2 is very, very, very crucial. If we don't hold that, we've got another level which we can try to make a little bit of a bounce, and that would have been at 107.666. If we can't hold that level, we're going to be finding ourselves down at the 106.4 area. So I'm anxious to see if we can hold this pivot here and keep keep this movement intact, but it looks pretty, how do you say, looks pretty daunting at the moment. But let's see. 108,200 is an extremely important level for Bitcoin on the macro. So I'm going to take you now to the 4-hour chart. And here, you can see that we are right over the top of the 800 EMA. So losing that 800 EMA is a pretty big deal. If you remember way back when we were trying to gain the support back of the 800 on the 4-hour chart, this is where we're testing it again. So coming underneath there would mean probably testing 107,659, and then, like I say, if we fail that there, we're going to be meeting up with 106,004. So it's pretty clear right here are some ascending fib lines from a fib spiral from a long time ago, and there's their possible support here for keeping our ascending angles intact. But if we fail this low, it's a pretty weak low right here. You know, we've got 106,004. Then we have 105,002. And then below that, it's 104,350. At that point, it would be extremely important to hold that level, because we are at the edge of two fib series, both of them. We have the edge of the blue, which we're under the curvature for that. In order to trade back up over that important area, you have to come up over 111,500 to regain that curve on the upswing right here. If we, that would be trading back up towards the 200 on the 4-hour. So it would mean that we would avert this downtrend, because we would be trading back over the 50 EMA on the 4-hour chart. So we would have, you know, more support there from the bottom. But if we fail this 800 here, there's a chance that you can go from 104,350 all the way down past 101.6. 101.6 would be the next major support level that we would need to hold. And right here, you can see these curvature lines from their red dash lines right here. And they meet up right at that level of 102.3 to 101.9. And then right below that is $101,079. If we can't hold that structure, there's another chance at 100,575, but it's easy to see that you would slip down there probably to the 99.4 to 99 or to 98.4. So we're at a crucial spot here. And that's about all I have. So I just didn't mention that 109,200 is a place to start. We did get up past 109,200, but we failed there. So now we're looking to this 4 hour to hold the 800. So that's a good way to gauge whether or not we're going to hit a lower level, is if we can trade above that 800. So there it is at 108,000, about 570. All right. I hope y'all have a good night.